Good morning, my friends, and welcome to the Breakfast Club. Here we are on February 26th, Monday, February 26th, 2024. Back in the markets again. No NFP this week. It'll be NFP on the 8th. Non-farm payroll. As usual, we're going to look for my buddy Kirk bright and early this morning. Hope you guys had a great weekend and that you had some meaningful connections with some of the people around you. Found a little joy and happiness in this world and spread a little happiness along the way. All right. We'll quickly go through some of the things I'm looking at this morning. It looks not entirely sorry, stand by here. Okay, where's everybody? Taking my computer, one of my computers out there. Get fired up here. Anyway, looking at the NQ this morning, looking at the 1 hour, looking for retracement back into this rejection. Not rejection. It's not a rejection, Darren. It's a busy. It's an inversion. So we're looking for this inversion to get reconnected to here at 1803 and get a kick off that, see what kind of reaction we got. Right now we're in the midpoint of this whole range here. So it's like sit by and do nothing. If we do get a run all the way back down into here, we have an original consolidation down here. So we'll see how we react off this on the 1 minute. But ideally, I'd like to see it get back down into this range here. If we come back and close in this order block candle here, we're back into this original consolidation. So wow, we're quite, we did well over the weekend. Built up a little bit of a educational video this weekend on trading consolidations. 3 ways to attack a consolidation. That'll be in the community tab on the show as well, on the channel. And it'll also be on lots of social media things on YouTube. Or not YouTube, on Facebook. And we're up to 205 subscribers. Wow. It's pretty awesome. It's been a busy weekend. We've gained like 10, 15 people over the course of the weekend. So it's awesome. Welcome all you newcomers. Appreciate you guys turning up for sure. All right, so we're going to keep our eye on this 1800 level here and see what happens. I'm going to kind of go through these real quick before we hit 10 o'clock or the 9:30 open. I'll kind of pop through each one of the levels I'm looking at. $15, 100. Get back into this original right here first. We're looking for this imbalance to be retouched. This consolidation down here. Run these lows. There's a small little imbalance down here at 50.81. So keep your eye on this. We've got this order block that's already been validated here on the 1 minute. So we're continuing on the downside. Look for this. Then the run to lows. I'm just kind of giving you a quick little rundown. Now we've got break above. Wow, look at that. What a nice return. See that little imbalance right there? We've broken above a high. We come back, we trade below it, come back inside it. Right here with perfection, you get short anywhere inside that little guy right there. You came back up 2 more times, you had a chance to revisit it. 3 more times you had a chance to revisit it, and then all of a sudden it's finally breaking down here. Look for a discount array right here. This one and this one. 39,178 and 39,173. Premium array. Look for it to come back up into here. This order block, that order block here as well. Could be coming just to a fill to the bottom of that. Kind of trying to blast through these real quick. So downside, looks like more downside on the US dollar. Look for 50% of this wick here. If we lose 50% of the wick on a close today, we're looking for further downside and getting back into this order block down here. So keep that in mind, because there's a big pocket of liquidity out here that still hasn't been rebalanced yet. So from a weekly perspective, I'd be looking to target these lows and possibly this little gap we see down here. And if we tend to blow through that, then we're obviously looking for this consolidation. Lost small imbalance in here at 50% of that consolidation from the learnings we did on the weekend. Look for that consolidation to trade back to 50% of it. If we lose that, then look for obviously a return back into a deeper fair value gap on a longer range discount array. So as that goes down, look for higher prices on your British pound. So you got lots of liquidity sitting above the market, a lot of congestion there. You look at all the wicks back and forth. That's going to chew you up pretty good. Get rid of these now. We've had lots of little taps inside that. So you're looking for more of this and this. As an upside, we want to get above this inversion here. Get on top of that again, running for rejection and higher prices. Euro, what do we got in Euro here? Real quick. I'm trying to find it really fast here. We've got this inversion here, so I like on a premium level. Premium discount, we're still probably hitting close to 50% of that range. So pull your fib tool from high to low. Real quick, 50% puts you inside that inversion one more time. Or that for, yeah, I guess it's an inversion now. We filled the top of it with a wick. Come back up, touch the bottom of it. Now we're coming back up to revisit it. So look for 50% or inside the midpoint or consequent encroachment of that SIBI one more time. So we're still in a discount on this huge range here. So look for it to start running back up, just pop into the above the consequent encroachment of that daily fair value gap. Just above will pop into your premium range if we plan on heading back down for lower prices. But if we're still looking for that American dollar to keep dropping down into its lower discount array, then we're looking for this up here. You keep your eyes up there. One spot at a time though. Aim for this, look for 50% of this wick to give way, and then look for it to climb up from there. Don't overshoot your PD arrays. CAD. So we're looking for, as the American price goes down, we're looking for this fair value gap to hold price now. Start digging back into this one we've been sitting in for weeks now, and you want to see it get below here. If it's reaching for, if the higher American dollar is reaching for its lower discount array, then we're obviously going to be reaching back down below these lows here, these equal lows, and digging back into this inversion one more time. Look for a rebalance off of this daily fair value gap, or return to the bottom, which would be a fill of this BISI here for a run higher. So as the American dollar continues to drop down, if it gets a little surge up, look for this to run into here, and then look to target this SIBI on the daily for New Zealand dollar. Australian dollar, look for this support at this level here off this order block, and then run back up and see what we get for this inversion. You want to see that start to give way, dig back into it, not just tap into it like this. You want to see that really start to push up through here to reach for this higher liquidity. Good morning, Kirk. Good morning, good morning. I hope you had a great weekend. So Japanese yen, this could roll over here now. The US dollar, if it starts to weaken, if we run up, look for, we've already hit it already, mean threshold of this candle right there. We're coming up just to tap it here, so we'll see if we get, yeah, it's right on the money already. So you'd think we're going to run for these equal highs here. This is a low resistance liquidity run right here. So maybe one of those we peak out at yeah, right now it's hard to say. Run for this liquidity here, and if we do, we'll run above this high, look for this order block here as your last line in the sand to see if it holds price, because it's the largest up close candle or the highest body candle. So we make that the order block we're looking for of interest, and look for obviously the body, the wick low, the open, and the mean threshold for those prices above you if it continues to climb. Oil, look for a run back into that order block there. Now that we've run this low out here, look for a run back to this order block or this fair value gap to hold. The next day, Tuesday, tomorrow, run back into this. We want to see this kind of turn into a fair value gap here now. We want to see this stay open today, and then tomorrow run back into it, tap it, continuation on the downside back into this fair value gap below us here. So this is kind of the range I'm looking for the next few days. That order block to hold, and this fair value gap to get revisited here on the downside for oil. I was looking at these, put the prices on here, guys, for you already. Gold, oh, it's already hit it already. I put that in this morning, and yep, it's already hit it. We're looking for this to key off of this order block here. Fill in the fair value gap. It's done that already. It's reacting off of it. So now you're really between this candle here and this candle here for gold. You're in the middle of the range, so it can't give you much more other than if that one loses its mean threshold on a close, look for further prices, further run up to the high. And if you see this mean threshold get taken here on the downside with a close, look for a run back down into the discount array down here. All right. So I do believe this has got some more downside, which contradicts the idea that Dixie will go down in price. So if Dixie goes down, usually gold goes back up again. So if this holds price and we start running above here, then that supports the idea that the American dollar will continue to drop for a bit. If the reverse is true, then we get a revisit back in here. I like the idea that possibly we're just coming back into this consolidation. See now there's small consolidation here, a leg that takes out the low of the consolidation. Then we run up above it, come back down to the top of the consolidation. This is model 1 of the consolidation package I gave out on the weekend. So look for model 1. Model 2 would be the midpoint, which doesn't really line up with heck of a lot here other than the probably the bottom of the order block here, or propulsion candle if you're looking at as a run above these old highs. And then you have the leg, so take 50% of that leg, that's model 3. And model 3 is closer to that big deep retracement back into a smaller discount array. So keep that in mind as your 3 models. And if you lose obviously if you lose that midpoint there of that down closed leg, then you're running for lower prices. The American dollar should be going higher. Not what I'm expecting though. So in order to support the narrative that we had over here in the American dollar, look for this guy to hold price. And that guy, so today it's Monday, you don't make some big decisions on a Monday, so kind of wait and see what the day holds for these 2 candles here. That's gold, silver. Look for it to run back into this area again. If gold gets a little lift, so will silver, even though they're not running in tandem the way they should. We have consolidation now. That's a good thing. You want to see a consolidation because now it gets to start which model do you want to use after the consolidation is broken out of. So silver, flat on silver right now. Looking inside a range for consolidation. You're looking for this order block here to hold price mean threshold. Will also fill this BISI right here. So as that BISI fills, look for a run above the old high. So really you're between this candle here and this candle here. So you have your bullish candle, bearish candle. You're literally sitting between the mean threshold of that one and the mean threshold of this one, which is also a fill of that fair value gap. So that's the consolidation you're in. So you got to break out between these two now. Clean a high, run the low. If you get a leg that goes down, pops back up, runs up, you got model 1, model 2, and then model 3. So your consolidation, get excited about consolidations. If you use that model I taught this weekend, well, I didn't teach it. Michael's been teaching it forever. It's not my stuff, it's Michael's. I'm just kind of driving home a specific thing about consolidations you guys can look for. What else have we got here? Well, this is all Canadian banks. They're all starting to lift off now, which is good. And if you're looking for nice little ETFs in Canada, if I have any Canadian friends watching, if you're looking for some ETFs, these are bomber right now. Hamilton HYLD is you're getting 10% return on your money right now, and it's obviously doing very well since October. HDIF and HDIF, those guys are doing great. They're really giving you awesome dividends right now. DFN, if you're in DFN, man, that's giving you 20 some odd % dividends. This one's up to around 20-25% dividends. That's DGS, AGNC, American one. I've been sitting this for years. I'm getting my ass handed to me, but it does pay awesome, consistent dividends every month, which is like, I think this, buying it here is almost 16% dividends for all my American friends. So this pays consistent dividends every single month, every month. So it's a nice little, it's all real estate. It's a REIT. So, but these guys guarantee their mortgages are backed by the American government. So they're a no-brainer. That's why you're getting consistency. Even when they're taking dips down in their price action, they're still paying some awesome dividends, and they return back to their range. Once the interest rates start to drop, you're going to see this one lift off, I think. Same in Canada. We got these real estate split ETFs. So that's earning about 14%, I think, interest right now, or dividends. They pay out every month as well. And ENS is obviously another good one that's paying some awesome dividends. Anyway, let's get back into here. Abs, good morning. Good to see you this morning. Consolidation. There's a leg that takes out the lows. So 1, 2, 3, we're getting back into this. You could let that dip down into the lower head. Stop losses down here. So this, we'll keep an eye on this just as a retooling or a revisit of the module I put out this weekend. So we'll put these key levels here. We'll see how this happens. A lot of energy in my voice this morning. I feel like I'm pretty flat. But I'm trying to keep it look at about 50%. I'm kind of just eyeballing this here. And on that leg, you're probably in here somewhere, like mean threshold-ish. Let's see how these levels respond for Model 1, Model 2, Model 3. Did you guys have a good weekend this weekend? I do love the way these inversions are working today already. A little inversion right here. This, I'm going to make a another little package again for fair value gaps and inversions, when to use them. Like they just, look at that little guy right there. Was traded below it, come back into it. Break market structure on the downside here. Little fair value gap. Body breaks it right here. We trade back inside it right there. And then continue down. There's your indication that, hey, we've broken market structure with a body, several bodies, and then come back and revisit that inversion, or that fair value gap that now becomes inversion the moment we start trading through it. And you see this little pop up, and it says I'm closing inside this, and the moment it closes below it one more time here, if you want confirmation, body closed below, you go great. If it comes back and revisits the edge of that one more time, I'm getting short right there. boom. So you would have almost zero drawdown there. You could stop loss could have gone here. And all it did was just come back inside this small imbalance sitting right here. Sorry, I'll make that a little bigger for you guys. There's the imbalance. Well, I'll make a little package just on imbalances and premium to discount array, like to light trading. We'll do all that. I've got some ideas, some things I want to kind of build for the community and help people out. Just as a general rule of the things that we're looking for when we're in here in the mornings, kind of like the things I'm looking for. So we're back inside this area here, which was good. Like that overall. Let's have a look at the price range back up into this order block. So watch this thing to hold price. We want to see it either its low hold and start to come through, and then we're going to wait. One of the lessons learned last week is to wait for the close of the candle and don't react on the body. That's definitely a little higher than expected. Even if it's wicking, it shouldn't wick above a certain level. So now we've into the rejection, broke the high, back to this order block, into this consolidation here. So same kind of idea, consolidation, run down below it, come back to the edge. There's model 1. We're coming into the midpoint of it now, model 2, and then 3 if it starts to close through it. If it starts to close through it, then we're going higher. We're right back into this whole old, look at that. Oh, we almost revisited that little inversion one more time. Yeah, good weekend, but this is better. Your wife's not going to read this. Don't worry, buddy. Your secret's safe with me. There's the open. So run up into this inversion here, that order block. Look for the higher price up there. Watch the price leg. Let's see if this is the tell me that's not a little pop off the reaction off of that price leg completion there. You can drive right through it, but I love it. See it when it runs straight to it and you get a reaction off of it like that. So we're inside this inversion now. Sammy J, good morning. Sammy! Welcome, welcome, my friend. Welcome. Where are you from, Sammy? Order block now valid here. I'll get rid of that now. That price leg is done. Done and dusted. See, it doesn't always have to be this nice little steady climb like this. Just slam-o. Done. Come back down to a discount array. And then if it pushes higher, that's fine. The fact that it ran down to a discount array, also inside this little inversion here again, see that right there, came back, tapped it, inside it. So this little inversion here, you draw it straight across, and we're sitting in that right now. And when you're between this mean threshold and the downside objective, which is this breaker down here, this 2-minute breaker runs above these old highs here. So keep your eye on this becoming inversion here. So let me just, that's an hourly one, right? Let's make sure that's an hourly inversion fair value gap. This is an hourly inversion fair value gap. Watch this guy right here. I want to see a body close below here. Like that. Now I want to see a candle. Once this closes, you don't want to see a wick there. You just want to see a full body close below that. Inside this propulsion candle here. There you go. Now you got a body. Now you got to see it. We traded below it. It happened quickly. So you want to see a body trade below it. Open up, pop back into it, run down here for the lows. Or at least for this breaker here. This little tiny fair value gap you see here. Right there. Dallas, Texas. Welcome, my friend. Welcome. So we just kind of keep an eye on that. That lower level there. Sorry, all this banging around you here and here. It's funny, I was telling my wife this weekend, I said, I get so excited hanging out, doing the charts during the week. Kind of, I don't know if you guys have the same kind of thing where you have the weekend comes and your mind is still on charts. It depends if you guys obsess over it as much as I am. But going into the weekend, it's hard to turn my mind off of the charts, what I looked for, and the highs and lows, some of the things you learned throughout the week. And that first little while, especially on a Friday afternoon, for me, it's 4 o'clock in the afternoon. Everything shuts down at 3 o'clock in the afternoon. It's all done. And then it's like trying to shut your mind off on Friday after having a blast. We had a good time on Friday, so some good laughs, some good camaraderie there. I really enjoyed that. So it's kind of hard to turn my mind off for the weekend. And then when Sunday comes, I get excited about 3 o'clock in the afternoon, Canada time, in the mountains here. We have, that's when the markets open up again, and you see, you come back, you see the candles bobbing up and down there on a Sunday. You go, welcome back, my old friend. Welcome back. And I sneak into my office and I say hello. I tap the screen, look into the screen's eyes with affection and say, welcome home. I'll be with you shortly. So then I end up sneaking into the office here every once in a while just to look at the candles and say, all right, what are we looking for? Where is this going to go? So that dug down into a nice big deep array here. Didn't quite come back to our breaker. So we're still inside these two, that range there. So we're still inside this order block. We've come back. We've hit the edge, the open of it right here. Tug back, and then driving up one more time. So look for the mean threshold. I want to see that hold. I don't want to see that close above that just yet. I want to see it run back down into this order block here. Be kind of nice before running higher. But then we're back into the midpoint of this whole range that we've got right here. So again, still nothing we're going to trade. We're just going to kind of look at it. We're getting our eyes acclimated to the candles, watching it trading back and forth, kind of keeping an eye on price action. You see it starting to get very wicky in here already. All these attempts to get down lower. Order block, that's not quite validated yet, so we'll ignore that. We got this guy right here still, and that guy there, so you're sitting around slightly into the discount array right now. There's a small imbalance here. Look for a like array above you that's in a premium, and that's just this big monster right here. So if you're going to go short off here, your stop loss is up there. That fair value gap's been, now you're just pretty much stuck inside that thing. You're not trading above it. You are a little body closing below it. But the fact that you're kind of banging around inside here can get rather sore on the old noggin, getting flogged around here. Because every time you close above it, then you have to reverse your idea about going long or short. You're in the midpoint, so that's why you kind of just stay out of this right now. You're back into the order block here. So again, look at premium, discount. If you look at that whole range right there. So yeah, we're just sitting in that 50% area. So you say, what kind of discount do I have? Where's my discount array? Right here, this little guy right here, and I will see the breaker down here. And then you say, well, that order block there is not a breaker yet because we haven't broken any swing points along the way, so it's just your old mitigation block or order block. So you're just literally ripping around between premium, discount, just kind of bouncing around here for it to make up its mind. Right now it's kind of marking time. Has to figure out what it's going to do from here. None of these order blocks are valid because we haven't really run above them, so it's just marking time right now. In the midpoint of this. You see that? Okay. And we still have our consolidation thing this morning. Now here's another thing. Depending on your idea of what you think consolidation is, you may look at this little package right here and say, well, I think that's the consolidation. Well, that's fine if you use that. Look, I just like these relative equal highs here, and the breakout above market structure was significant here, so that's why I went with that one. But if you looked at that as your consolidation, look for your equal highs back here, which supports that there. Then take 50%, which puts you in here, and then you still got 50% of the leg that takes out the consolidation lows here. So consolidations are a matter of interpretation a lot of times, especially when they start to bend and they're not nice and flat and straight like this. When you see these, you go, oh, well, you know, that all could be a consolidation area right in here. And it really is a matter of, as you develop an eye for it, you start to say, this is what I'm happy with. That's a PD array I'm content with. So I think I'm going to stick with this as being my consolidation, or that whole range there. I tend to think you've come down from a high, you move into this flat range right here. See how the bottom is flat? This coincides with this, so you can have that, incorporate that whole area in there. So if you want to be more precise, you kind of just go like this. So this is 50% of it right here. That's the high, and then we pull 50% of the leg. Okay, that's right there. So that's pretty much closing that fair value gap. So those are your Model 1, Model 2, Model 3 reactions off that fair value gap there. I guess technically you could say that was your Model 1 entry right there. You had a body break above the high, return to it, so that's Model 1, done. Reaching for a higher PD array objective, so that one's done for Model 1. Just know that you can still come back to that one more time, tap it, and again still leave. But if you're looking for a quick Model 1, that's your model right there. So far this model, this entry here, albeit you got beat up in it quite a lot, your stop loss would be sitting way up here. You're aiming for your first objective here. You see how if you entered in here, your stop loss is there. You're not even getting a 1-to-1 return on your money. But if you did put it here, you're going to get 1.5 at least return on your money. We're digging right into that order block. See how we're starting to eat right through the breaker? With one candle, you didn't just tap it and pull off real quick. You hit it, and then now we're driving through it. So this is not holding price. We're not expecting it to anyway. So there goes your first one. So it kind of sits right on it, reacting on it, tap, tap. So if we're driving down deeper, again, stop loss is down here. If we're going to run that low, if you think you're going to run that low, keep your entries down here and not way up there. Now this is good. You see all these big openings sitting right here? If you do get this, if you do make that as your entry, as your Model 1 entry on a consolidation, you can call that a CM1, a consolidation Model 1. Hit it, look for old low, premium discount array, look for up here. If that stays open, this is good. Look for just a return to this low here. Oh, sorry, I didn't even look at this this breaker here still. When you break below a breaker, usually you find that is your level of support. That can just hit that sucker and just start driving all the way through. So a quick run from here to here. It's like I'm forfeiting it after the fact. Sorry, I apologize for that one. Back to your breaker here. So 92 to, there's 10 handles right there on that 1 minute. If this is your swing, what time is it? 40, 45, 46. Yeah, there's your 45 potential swing point back into a if this makes a new low, try 48. Right back to the edge of the inversion once again. Watch how it reacts off of this. If not, okay. So there's your line in the sand for a Model 3 entry. If that leg takes out the low, see, you've come back and filled now. You want to see a snap off that? Yeah, nothing. That's heading for the low. So your Model 1 would have worked nice. Model 1 retrace back to here would have been nice. The body starts to close right through that, obviously running for your lows. That's not even finished yet. There, now it's finished. It ran the lows. So that's why when you're looking at your entry, like we were talking, if you keep your entry nice and tight to your stop loss, it's really small and very low leverage. We're not even at 10 o'clock yet. So a new breaker. See how we drove through that breaker all at once? Boom. Come back up, find some support on it, continuation on the downside. We're looking for a return back to this consolidation over here on the hourly. On the 1 minute, you gotta be nimble. Derek, good morning, my friend. Good to be back. Oh, you hit some nice drives this weekend. Gotta love that. Good for you, man. News at 10 o'clock and 10:30. Do we have a 4-hour inversion? We definitely have a 1-hour one we just hit. We just created it now. We filled that fair value gap in all the last hour. We've come back through it one more time. It ran the lows. So what we're looking for here, now these lows got taken, and they got taken before 10 o'clock. I think we might come back here, revisit this one more time. What I'd like to see is, let's get back into this session open, the New York Open midnight candle. Keep your eye on this level here. Premium discounts, small imbalance here, sippy here, and that inversion back on that side there. Didn't quite connect to this old low here, old high here, just short of it. Back to the breaker again. Right there. Order block here. Mean threshold. We'll watch to see if it closes above this. You're really between these two candles right now, this one and this one. That's the imbalance. Back to the inversion. See how it's bouncing off that. So now you want to see this candle and this candle. One of them's got to give way. You're back inside this little bissy here. Where do we close now? Above or below it? And this is, well, you're gonna, this might be moving really too fast for some people, but the sooner you can understand how each candle looks for specific arrays, all your other time frames are going to start to come into focus so much quicker for yourself, because you'll start to see it and understand it very clearly. Now I understand. I've only just recently started trading the 1 minute. I was always on a 15-minute or an hourly, and you wait such a long time for your setups to occur. And for my ADHD, I like to be a little quicker, so this is kind of a nicer range for me to play in. But the setups are exactly the same. The algo is running exactly the same. It's reaching for specific PD arrays. And the level of precision you'll see down here can be quite startling. So watch this guy here. So you really got to keep your eye on things, how they develop, and it can change up within a minute. It can change from a positive direction or a bullish direction to a bearish direction rather quickly, long before this you see anything on those higher time frames. Let's look at the 4 hour here. We have a 4 hour inversion over on this side here. We're stuck in the middle of that one. Right back up into that 4 hour mean threshold. See that? Right on the money. Funny how it seems to overlap on the 1 hour as well, right? Premium. Does this say let's go lower this week or lower today for sure? Nothing says this bull flag better hold. Those are retail people want this bull flag to hold. But right now, that mean threshold has been taken on the 4 hour. We're really between this candle here and this candle here. If you lose the mean threshold on that candle on a low, look for a nice little discount array back in here. And there are plenty of them. Plenty of them. We have an inversion over on this side here as well. This 4 hour looks promising for this bull flag to let go. If we give up on the bull flag, this is going to be feasty time. We're going to be the feasty boys. You guys remember the Beastie Boys? We're the feasty boys and girls. I'm sure there's definitely... Judy was in here. Judy Ross the other day popped in all quiet. She'd been sitting there for a few days in the shadows watching us. Kitty hasn't turned up yet. Looking at some of the few ladies we have in here. Welcome all you ladies to the Breakfast Club. Yeah, I like that order block holding and then us continuing down. See how we're banging off of this inversion right here right now? I take that 4 hour one and draw that across. Get the idea what it is I'm looking at. Missed the 4 hours. Sorry, 4 hour inversion. Inversion. So we're just coming back, tapping on it. I want to see that pop through here now, find some support, and a whole world of deliciousness opens up for us. So order block, coming back inside, mean threshold, finding support. Now I'd like to see this high open, this little imbalance right here, just come back and tap it, pop off, start running back up again. We have this little imbalance right here still. Mean threshold, that's the one you want to see hold price for run for a higher PD array. So look at your premium and discount arrays. Got this one here, this one here. If that remains open and this mean threshold is lost, we're definitely heading into this I'll be back to this order block on the 4 hour. That breaker here is holding price quite well. See that? Dip below it, come back, hit it, wick into it again and again. That candle holds price. This guy will end up having to give way. Breaker. Breaker beats order block. If you're playing chess. Queen beats pawn. Mean threshold. It's like line in the sand time here. We've come down, hit it. It's getting pounded on the walls are getting knocked on. That mean threshold still trying to hold price. Rejection block, inside inversion, or inside the inversion yet, and then away we go. Head back down here. The ECB press president at 11 o'clock Eastern time for the Euro traders. It has not given up this. This guy's still holding price. The mean threshold here. Wicks can do the damage. Mean threshold still holding. So now you see the range we're in. We're between this guy here and this guy here. So it can run all the way up here, mean threshold, even the wick, roll over, come back down again, and then you're really between that guy and that guy. It starts to compress, and then it has to start to make a breakout. It runs out of arrays, and if you watch them carefully, you'll see each array still being hit. And when they run out, they get smaller and smaller. We get into 10 o'clock, which is like right in a minute. In 15 seconds, we want to see this go blam down and then start running back up again, and our bull flag hold, or we start running back up, clean out some highs, and run back down. Here we go. Where are we going to go? Then we'll wait for our silver bullet setup. If this is their range for looking for today, looking for a silver bullet short would be a nice place to go. Judy, welcome, welcome. We were just talking about you. You probably just heard us, right? You probably sit in the shadows there, listening to us. All right, let's pull this out a little further. That trade we were talking about this morning, this inversion here, got beat up inside there for a little bit. Stop loss was sitting up here. You took out your lows. You've got some good, that was an excellent entry this morning, albeit choppy, noisy. And if you held that one, if you were holding it all day because I think it's going to run down and back into this big range here, then you're about to make some bank today if this gives way. Right back into rejection. Keep your eye on that little candle we talked about there. A little imbalance sitting right there. See that? Snap off that? Does that not get you all kind of giggly? Like somebody just tickled you? Doesn't that just tickle you right there? You put your crosshairs there and it's like tickle, tickle. Nice reaction off of that. Looking at the premium and discount arrays, right? You're looking up here. That's a premium array, right all the way down to a discount. There's a little tiny one right here. Like arrays, high, low. Look for your premium and discount arrays of similarity. A lot of times you will see it run from one PD array to the next PD array of similarity. Premium, discount. See that? All in one little quick run. Again, not that you're actually trading that, but we're just studying price action. We're not making any trades, even all that Model 1, 2, 3 entries that we talked about this morning. You're not making any trades until you see something of sustenance here. And in a time that better suits a trade entry. Right now we're sitting at 10:04. We still don't have a silver bullet set up yet. We're inside a consolidation. So we want to see a break out of here. Something clean that you can get into. Unless you're still feasting off of this entry here earlier. Which I think you should have been scaling out portions at these lows. Look right here. Or we're going to revisit this puppy one more time right there. Mean threshold. Look at that. We did trade below it with a wick and a little, yeah, we've had a couple of bodies trade below it. So run back to a premium array to drive this price lower. Look for this next price leg down. This price leg here. Look for it to, I like these lows here. Look for premium and discount. It's going to be there before I get a chance to draw it out. There's over 50%. Your 62%'s up in here. This is your fill of your fair value gap here. But I think if we get a good pump straight back up in here, the 70% optimum trade entry, there's 75% of that small range you see there. Now if I pull this all the way up to the top here, 50% puts us into a fill on this, back into those little lows right there. And a 62% gives you a full fill of these premium arrays, that premium array up there. So this is in discount still. So to me, if you're really going to start moving price and you want to go for a premium, you'll come back up into this range here first before running those lows. So look at this guy, we're still discount as far as I'm concerned in this longer range. Pennsylvania, aren't you worried about losing your name? I hear some rumor about one of your politicians down there was saying something about Pennsylvania. They're going to take your name if you don't get doesn't get elected. We won't get into politics. Okay, so we got this. I like this little inversion. What is it? The fair value gap right here. One minute. There's nothing up here except that big fella right there. I'm drawing a lot of boxes. I know it's probably going to drive you guys crazy. It does me when I got too many boxes in here. Coming at 50%. See how we've hit our... Now we're digging into the premium array. See that? Look for here. And then keep your eye on that guy right there. This is the 62% optimum trade entry area here. There we go. We're digging into that array now. Lovely, lovely. Anything can be a reversal here and come back down. I'm alright with any one of them. Mean threshold. Right above there. Didn't quite get your 62%, but you're in a premium array. So people say, well, how do you get precision on this? How do you look for a more precise entry? When you're looking at PD arrays that support premium and discount, and you say, well, if I have my 1% of my trade, if I'm getting in super early, right at 50%, for example, your stop loss is up here, your leverage is going to be super low if it's 1% of your account. If it's 62%, your leverage will get a little higher. And if you're inside this inversion here, you might have slightly higher leverage with the stop loss still sitting up here. You may layer your entries. That's one thing. We can be precise with candles sometimes, but when you get back into consolidations, it's kind of hard to pick your precise entries. So you have to kind of stagger your entries with a stop loss that's still supporting your. Yes, we're looking for a silver bullet entry here. So if you're going to go long, if this is a long day right here, this is the next price leg up on a 4 hours. We could be heading hugely higher here. So keep in mind, we can't support a downward run if this is another big leg up. Like if we're completely honest, this could be another massive run all the way up here, which could be right up into your 18.5s or something like that for the rest of the week. So keep that in mind. Don't marry the idea that we're going to go lower. We are between these two candles still on the 4 hour. So right now, right now we're inside this range here, very small range between that candle and that candle. But you see how we're finding support at the top of these? They're bouncing off of this little fair value gap. If we run all the way back down in here, this could be your silver bullet run for higher prices. When you're stuck that tight between your two arrays, it's hard to call it. So Monday, it's only Monday. It's only Monday. Scrambled eggs time in Pennsylvania. Back to a 1 minute. Our little order block sure is holding price breaker here. Queen does not beat pawn. Look at that. Nice bounce back off of there. That's your silver bullet entry if you're looking for it's too consolidated for me, but your 10 o'clock. Return to run for this high here. A run from 99. Well, there's already 17 handles if you take this high here and back into that 1 minute fair value gap in a premium array. We've just tapped the 50% again. Look for this next leg up into this guy here still. See how this leg here is forming? You want to see that blow right through here now. Start digging up into this mean threshold of that candle up top. Either in this candle here now, came above, back into it, react off of it, start looking for the next up close candle above you that we've already broken below. Largest body candle is the one you want to look for first. Then the body, so it's respecting the body here. Also the mean threshold or the consequent encroachment of the SIBI here. You want to see this hold price. Get back to the open again. If this candle breaks, you give way to that, then now it, like that, it now becomes a level of support. And that one, we lose that one. Now you're between this candle and this candle. Or that breaker right there. Draw that one out. Which is a return to this inversion one more time. Back up to this guy here. So you're between this guy and this guy now. Come back, tap the inversion. So when you start getting into small ranges like this, you don't want to be jumping in on anything unless you're absolutely sure it's going to go one way or another. Well, we've already argued both directions for this already, so if you're super sniping this, take your 10 handles, move to the side, or do whatever the heck you like, but back to this inversion right here. Premium, discount, look at your arrays. Look for like arrays from higher to lower. We've got the mean threshold right here. See how we're reacting off of that? Now we either got to start really driving through it to go higher, because we've already hit a reaction off of this inversion again, which is a good positive thing. So we want to see this give way and then start pushing for these equal highs above you here. If we don't, then we've got the equal lows below us. So premium, discount. Inside this small little range here, you're running for liquidity here, back into a fair value gap, order block, and a larger range, discount. Remember when Michael was talking about ranges, and you have premium and discount, and you also have a premium and discount inside the premium range. And it also has premium and discounts. If you took that and split it into quarters, that top 50% has its quarter above, quarter below, premium and discount as well. Look for specific order blocks inside those ranges. So I want to see that give way now. That's good. I want to continue pushing higher. We shall see what Monday has in store for us, because I think this is going to be a fun week. If this ends up being that order block holds our price here, that mean threshold holds price, and our 1 hour inversion holds above us, and we blow through the midpoint of this sometime today. If we just run up into here, if we blow through that on a high, and we close out here on the day, up into the rejection, then we're going higher. If we close below here on a rejection, we're going to dip back into a discount array in here somewhere, I think. You'd have to make sure this gave way though. Get underneath that, find some support. So ideally I want to see it close below here, confirm close below here for further downside. Meanwhile, back in the ranch, we have consolidation, leg that takes out the consolidation. See right here? Here's another one of those model 1, model 2. So here's your consolidation. We have a leg that takes out, we have one that takes out the lows. So you take that consolidation inside this range here. There's the leg that takes out the highs. See that? If you take from this candle's high to that candle's low, right there, and then we make our little equilibrium tool, 50%. Look where it came. So that's the 50% of your consolidation. You can either come back to the bottom here, trade back to a discount array, or inside a fair value gap. In this case, we didn't even hit this low here. We ran back up to the midpoint. So there's your 50% right there. Hit it, reacted off of it, came back into a little discount array right here. Now we're pushing for, are we going to take 50% of this leg? So here's where the leg that takes out the high, model 3, 50% puts us right here. So we'll see if this, and again, your stop loss would be up here. So model 1, model 2, model 3. If we close above that, we're going higher. Then we're going for a much higher run. So we'll see if we close above here. On the 1 minute scale, see how we broke above these highs, come back to them, support, push higher, look for this in here. So we're inside this inversion that we talked about over here. And this is the 1 hour inversion right here. I've already wicked through it. So you want to find this as a stepping stone to get on top of here now to start climbing higher. See how it steps right on that guy there? Went up, come back, tap on it. Right there at 62. Let me get rid of this thing here. It doesn't really matter anymore. Oops. Price leg up. Look at that. Does it not coincide with the mean threshold of this candle? Is that a level of precision? Well, we'll find out. We already hit the price leg once this morning. Can we be random enough to do it twice? What's the 10:30 news? You can't find it. News in 23 minutes, or 23 minutes ago, Wall Street inches up ahead of inflation. Order block. You want to see this provide support. You want to see this now stepping up now. This would be really good if we had that 4 hour one and start breaking the higher, and then we start driving up for a new high. That big price leg we looked at on the 4 hour, giving us our prediction for higher prices, would be awesome. See how we found support at it? Body closes above, come back, find support at the inversion. push higher. Look for this mean threshold now. Do we give way? This mean threshold of this candle here has been holding price. So like array to like array. Discount, premium, last up close candle, last down close candle. Order block. There's the little tiny fair value gap. It's popping in there. Back to order block, mean threshold. Sorry, consequent encroachment. When I say mean threshold, I really mean consequent encroachment. I just like to use everything as the midpoint. I used to like to call it a mean threshold, but we're just splitting hairs over terms. We're back to the mean threshold of that candle. You want to see it snap off of that now. You don't want to see it drive through 3 PD arrays and close. Otherwise, we're coming back into a deeper retracement here into that little range. So let's see what that order block. See, it drove all the way through it. So it tells me we're probably coming back from a discount array first. So we've come back into order block body right there. We've run through the midpoint here, so we're looking for a deeper discount. Look for a premium and a discount array here. We have this fella right here. We also have a little imbalance here, a BISI here, imbalance here. Premium, discount, old highs as well. That order block gets validated. See right at the mean threshold. We got a body traded above this inversion. This is a deep retracement back into here. We did not get the discount array yet. If we lose that high, then we're extending this range even further. Look for, again, you're still looking for this up here. It's your price leg to finish off. If that holds, we're still looking for a deeper discount down here. So we lost that mean threshold. I was expecting that to come back a bit further, but we're looking for this mean threshold to see if it holds, or if we blow through it. It'd be nice to see it just go blam right through. But that price leg now is completed. Watch it, see how it reacts, or does it just keep pushing? See where that one closes now. Got the rejection block next. But that price leg's done now. Now I'd like to see this become more of a support. This inversion now, you want to see that along with this order block find some support to push higher for rejection. If this closes here on this mean threshold now, this is the top of the hour, the 27 candle reversal. So this could be the swing point right here. That mean threshold's holding, price leg completed. See this take out this midpoint and then the low. Look for this to potentially turn around and come all the way back down to a discount array. It's either that or we got the crazy Ivan in the next 10 minutes. Did you find the news event? Anybody find any specific news event? I'll look on my Forex Factory. Home sales is at 10 o'clock. I didn't see anything on in Forex Factory that says anything about any other news, unless we're looking at a lower volatility news event. So I'm looking for this thing to hold price here now. We start getting a retracement back into here off that 1 hour inversion over here. Find some support of that. Start wicking away. We're expecting a turn to occur here at the mean threshold. So again, that's if you're bold and you trust your arrays, stop loss here. You want to see this give way. And looky. So we just wicked below it. What do? We wicked back into an inversion again. Discount array. So it was running for here when we were looking for it to get down further. It was just saying, let me finish my leg first, then I'll start coming back down below, reaching for these little imbalances and stuff here. Look at your range here. I pulled the range a little too soon before the leg was finished. 50%. I think somebody was mentioning, I think Mo was mentioning this morning about the 90-minute cycle that you see in, some people have done some research about the cycles, that Dale's 90-minute cycles. But you notice how it doesn't mention anything about the 27 candle, 29 candle. It's the minutes that you're expecting a turn at a specific PD array. So again, you got to come back to those cycles. There's definitely some importance to those cycles. Whether or not you find detailed analysis you can make from that inside those, that's even better. So if you say your cycles occurred and your distribution cycle begins now, and it begins at the 30-minute mark, and you say, well, at 27 minutes I'm expecting it to hit that, you can come in at real confidence and hit your short up there on your cycle. If you're expecting a distribution phase or a cycle now, then yeah, it's an awesome idea. We'll come back to that little tiny inversion. See that little inversion? That little BISI right here? Ran right into it. So you're between this candle here and this candle, well, those two candles right there right now. Old lows. There's the old low. This right here, I like that little area right there. So what kind of reaction you get off that there as your high. This little inversion here. Order block. So we're back into this one again. Snap off of that. Now you're between these two. That one here. This one here. Are we starting to push higher for another price leg? Or is this just giving way here and we're going to start rolling over and coming back down? And now we're getting into, we had a buy profile, reversal, break in structure, leg back into order block, continue driving back down. You want to see it break through here, come back up, find support at that candle, continue pushing through this candle here, and eventually getting back into this discount array that hasn't been here yet. Inside this consolidation, you do the whole thing starting all over again. Consolidation, break above, level 1 entry, look for 50%, level 2 entry, There's no leg that takes out a low, so you only have 2 out of this one. And then you're running for a higher high. So consolidation, you have a level 1 entry there, or model 1. You wouldn't have got a model 2, but you would have got a model 1 for a run above the next high, which is this swing point here. Take a portion off there, higher array. If you're aiming for your mean threshold, which we were calling way in here, scale out points. You're dipping back into range, discount array. That little guy there, we were pointing that one out, dipping into that, looking for this order block here. So array, premium, discount, they're all running to the arrays that we've been discussing as they're forming. So do we react off this, or are we pushing through to rejection, or are we coming back to revisit this mean threshold one more time? So look for 50% of that wick as well. Watch where we close on this candle here. Okay, we closed above, so looking for higher. Rejection. Coming up to mean threshold again. Morning, Laurie. How you doing? Did you have a good weekend? I get to live vicariously through any fires, rescues, any damsels in distress, any cats from trees. I think of the cat when I say cat from trees. That brings back an old memory. We had to get this. We got called for, fire department get called for cats in trees all the time. And don't let anybody ever tell you that cats always make their way down. Arborists have found cats, dead cats in trees, just so you know. They don't always come down just because they can get up, they can come down. They do get scared and they end up staying up there sometimes. Anyway, we got a call for a cat in a tree. We brought the big aerial Bronto out, set it up on the streets. The little girl was all like, "My cat's in the tree." We're like, "Oh, I'm a fireman, I'll save you. I'll get your cat for you." And we're always thinking, you don't want to start getting in the habit of rescuing cats from trees, otherwise, you know, you're gonna be called for everything. So we ended up, there's your higher price, run through the midpoint. So let's see where that closes right now. So a big crowd is starting to form now because the fire trucks always attract kids and parents and stuff to their neighborhood. So we got the truck out. I see this cat's way up at the top of this huge pine tree. So we extend the ladder way up there. I get my bunker gear on, get some leather gloves on, because you think cats are friendly. When you rip them out of a tree you're peeling them off a tree at 100 feet in the air or 60 feet above the ground. These cats are not super, they're looking at you like, "You pull me off this tree, mister, and I will take your eyes with me." So you're like, "Here, kitty," and it's like, "Meow." And then you reach in through the branches to grab the cat, and naturally they'll either climb up a little higher and you got to chase them some more. And you finally get a hold of the cat, and then the crowd goes, "Yay, he's got the cat." And the cat's like, they can't hear the hissing and the "I'm gonna take your eyes, mister," that the cat's yelling at you, hissing at you, looking for a quick way to get a hook into the side of your eye socket. You're like, "Here, kitty, kitty," and you grab the cat. You have to pull them in super quick to your body and hug them as their nails just come out and try to find anything to purchase off of soft flesh anywhere. And they're cheering down there. Meanwhile, this cat's like, "I'm gonna kill you. I've been trying to get away from that kid for hours." And you're like, yeah, it's okay, buddy. I gotta take you down. Laurie's probably had that experience, I'm sure. So you come down, you're hugging this cat, and you almost have to peel it off of you because you're like, here you go, kid. Meanwhile, your bunker gear has got all these little multiple perforations through it because this cat's been really locked on on the way down. Not like in the rescue at all. Okay, so we're back inside this Bissy here right now. You've never got a cat call like that? Yeah. When they're I suppose anybody, if somebody peeled you off a tree at 100 feet and you were dangling off the ground and they're just holding you a scruff of your neck, you probably want to reach out and grab somebody for sure anyway. So yeah, I can't blame the cat, I suppose. I've had a bear in a tree. They call us and said, there's a bear in a tree. It ain't stuck, trust me, and I ain't getting it down. I'm not pulling this bear out of the tree, so you end up calling the conservation officers, and because it's in a rural township, they got to tranquilize the thing. If they can't scare it off, they bear bang it off, and you just do bear bangers on a bear up in a tree, it stays there. Very seldom does it come running back down and say, okay, I'll move to another tree then. You can have that one. It tends to stay there, so they have to trank it. And then when you trank it, the problem with is the bear, you can break the bear's neck because they just go sleepy until they fall out of the tree. So you usually have to kind of leave them alone and everybody get out of their way so they get looked out like they've got a free room to run and get out of Dodge. And we got called, and it's like, I'm not going and grabbing no damn bear out of the tree. But you got to get to the point where you say, well, how do we get up there? If they trank the bear and he falls asleep and he's stuck on the tree, you know, we need an aerial ladder to haul him out of there. So you're like, all right, well, you tranquilize him first, and I want to hear snoring. I want to hear, you know, sleep apnea in this bear before I go up there and try to pull him out of that tree. So back inside this order block here, we have a swing point here. We didn't take out this high though. I don't like this idea for reaching back up into this to get short if we haven't taken a previous high. So you're back inside a big deep run back down into this candle here. Bodies are still respecting the open. You're already between these two candles right now. My guess is that wants to go a little higher. You're just kind of banging around in here right now. TK, how's it going, buddy? What's it like over there in Germany? You should be in the afternoon over there. Deep into the afternoon. Lunchtime, 3 o'clock-ish or more. 4 o'clock. Premium discount here. Order block. Run back to that guy. See that? Come back down to this guy. or this fair value gap here, find out what the 50% of that is. You might come back and just tap onto this inversion here, or right on top of that inversion right there. We pretty much opened on it. So mean threshold with the body, mean threshold, then we got to come back into this. If we're going into this consolidation, this could be the next level to look for. If we end up blowing through here, which we are, rejection block, then you think like array to like array. So rejection, we're going to run all the way back down into rejection. So watch, see what happens here. See if we get all the way digging into here and back into the rejection block here. Or do we close above that and start pushing higher yet? This is what we're talking about in terms of like array to like array, premium, discount. Always kind of look at that every time you're looking at these small little ranges. What's a premium, what's a discount array? And the reason for that is that if you're tracking this to go higher, you want to say, I don't want to lose this array. If we're into this small range now, and I've gone premium, this is the discount array, I don't want to lose this. So I'm going to trail my stop loss up here. Here's a logical level I don't want to lose, because if we lose that and we take this low out, then we've got a break in market structure to the downside. So you can trail your stop loss off managing the back end by logical levels of support. And that way you get into zero stress trade as quickly as possible, and then you're scaling out at, or paying the trader at, logical highs. So it depends on your preference for trading your trading strategy. So now we've come back to the top of the inversion once more. I just want to see if this will still work its way down into this discount array, or we're just finding support off of here. This is more positive for a longer run up. This is more of a marking time type thing. If we come back into the rejection block, that's a good sign. That's good. That's what we're looking for then, for higher prices. Premium discount. We just came back into the inversion, which is this SIBI here. We closed above it, came back inside it right here, and also the top of the inversion on the hourly, and went higher. Relative equal highs here. Are they engineering liquidity on the upside to run this and drive back down? We've had this constant push higher. We have a trend line phantom occurring here. If we blow through the trend line, look for this candle here and this discount array down here. We're still inside this big range here, and we're still finding support at that mean threshold of that candle right there. it's lackluster, not exciting. But this is how you have to study price action. You have to be right down watching each candle form. If you can track each candle as it's forming, and you get better at tracking a 1 minute candle because you're practicing, you'll get way better at whatever range you prefer to trade in. You'll get so much better at that the more you start getting right in here and say, oh, this is so much focus, mental focus. It does. It takes a lot of mental focus to stay inside these ranges and constantly keep looking for premium discount. And you'll find that as you get more tired, you'll start to miss them. You'll skip over them, or you'll forget one back here. And it just means I just got to focus a little bit harder. But see how long you can stay on the horse. As this is trying to shake you off right now, off the price action, and if it shakes you off, that's fine. You just say, okay, I got shook off there. Where was I? Let me get back on the horse here. Which direction am I expecting this to head? Then hop back on again and keep working it until you get really good at staying on the horse and following it each array back and forth and stay on the horse. Say, well, you're not shaking me off. I got an idea of where you're going to go next, right? So that rejection block that we looked at there, we're still looking for this rejection block down here. Even though we did get a book up over there, didn't close above the high. It didn't even take out the high. It just became equal to the high. So we're in that rejection block. We're looking for this rejection block down here still for discount array. So that means we'd have to give up 1, 2 to the high, the open, and the mean threshold in one candle and start pushing through to here for rejection. Like array to like array. Back to that order block there. Look for bottom and the mean threshold as well of that candle. We came back to the mean threshold of this candle here. Rejection block once again. So I want to see that blow through here. Either take these highs out and continue pushing higher, using this to have our consolidation, find support on it to get high, to go higher. Or we're going to have a probe, one more probe, turn around, and then finally come back down into our discount. So remember, if we start to break through our trend line phantom, look for 50% of the trend line. Look for a return back into that range. So now we've got this candle. Just got validated right there. Rejection. Blow right through this. Run through here. Or find support at that mean threshold and keep pushing higher. Keep coming. It's a long, circuitous way of doing it, but we still have this candle here, so now you've got this one here. You've eaten through that one, so you're already between here and here now. Still inside that rejection block to rejection block. It's just taking its sweet time getting back down there. That's still a discount array here, from high to low. In that range, you got discount, you're back up into rejection, order block, validate, open, mean threshold, inside this inversion right here. That's where we're sitting, right in there. It looks like it wants to get higher, hey? We should be spooling in our next macro right now. At 8:50 our macro begins. We should start spooling, but this feels very consolatory right now. See where this candle closes in the next 20 some odd seconds below the mean threshold of that candle. We're still looking for potential rejection block down in here for rejection to rejection. Close below the mean threshold. You see why this is high resistance, right? For example, if that was your trade to go short there, from like array to like array, you're getting squeezed a lot here. Not that you should be taking that trade. We just want to see if this array to array ends up happening, because we're right up in the premium portion of this little run here. 50%'s in here somewhere. And we've been banging around in the premium portion, but not a lot of reaching for the lower portion. As you can see, we're constantly reaching for new highs. We've engineered some liquidity above. There's a lot of pool of liquidity sitting up here. So we could see a run through the highs and back down and not actually reach for our rejection block. Right now we're stuck between this array here and this array here. Those two candles. Mean threshold again. Closed on it. And there's nothing really down here to support price. So you've got to start either extending down further or just wick here to this inversion and then blast it up. I like this. Look for rejection down here, and then it took a long time to get there, but like array to like array. We're definitely in a discount now, so mean threshold again. There you go. There's your rejection. Took a long time to get there, but like array to like array. That's why consolidations, you can certainly get beat up quite a lot inside them. Again, the point was just look for arrays that are similar. And that would have been a kind of a, especially when you got squeezed here, right? Stop loss sitting here. That's a big squeeze. So you want to see this kind of give way now. Find some support at this and start reaching for a discount array here. Start taking this trend line phantom out now. Cody, my man, haven't seen you for a while. How you doing? You gathering up? You just taking like truckloads of money to the bank? You haven't had time to pop in, say hello, or what? Cody, you're over in Europe there, correct? Bosnia, that's right. You were in Australia, or no, Austria. Like I put a Leah in that. In Austria. How was that? Mr. T. There's another fellow I haven't seen for a while. How's that thing that you and I were talking about before? How's that working out for you? Is it still working out good? I hope that's still paying you dividends, my friend. Here we go. Look at it, this trendline phantom to get taken now. Lovely, lovely. Find support. See how we have a body close below it. Trade back up to it. Get some support. Start looking for a discount array now. It's not shaking us off yet. It came close, but didn't shake us off. Still looking for those things now. As set up, we have a body close below the inversion. Find some support at it. You can still reach up into a premium array, into this little thing that's forming in here. If that candle holds and this doesn't continue down, which I think it's gonna anyway, but if it doesn't, then you look for a premium array, discount array, and you start doing that whole swing point all over again. And you may say, oh, that's just too much work. Yeah, that's practice is what it is. You're not looking for trades, you're just looking for staying on the horse right now. And then if it just suddenly blasts through that and you go, wait a second here, this doesn't support a downward run. Are we going higher? We have a big bold candle get up above this. I'd like to see this thing have a leg that takes this consolidation here out, and we do our 3 model consolidation trade. Otherwise it's a 2 model consolidation trade. Here there's only 2 models. One is model 1. Model 2 you didn't get into, so model 1 for the high. The 3 model 1 is the consolidation. We've been in here. Leg goes down, comes back up all the way through it. Tap model 1, model 2, and 50% of that leg model 3 for higher prices. So again, you kind of, as it's looking, you're looking for, is this forming? Is one of my 3 model entries gonna form? I haven't taken out any major high yet, so I can't use this model that we did here for trade back into it to go low. That's a whole new different model entry, which is this high here gets taken out by a new high, a fair value gap that forms. Trade low below the fair value gap, trade back into it, get short another 1, 2, or 3 different entries. Stop losses up here, heading for your low. That's your another entry. Then you got your silver bullet entry. So you got 1, 2, 3 entries here. You got silver bullet entry, 1, 2, 3 entries there, and then you've got your consolidation 3 different entries in that. So you've got like 6 different models or 6 different ways you can enter into trades, and this is all in a 1-minute consolidation. Or an hour-long, small little hour-long candle. So we said it could come back to the premium array. Look at that. Boom, hit it. Kicking off of it. So now you're back from these 2 here now, if that's your swing. like that. See, it snapped off that. And then you're back into this array here now. Now it's got to go. I got to do something. I got to either bust out of here or I got to bust out of here. So we're into this. We're still inside this bigger range right here from there to there. We went up into a premium. Now let's just start driving all the way down, clean up the sell side where we have trailing stop losses. Following this up, come back and start cleaning them up. Or you move into your, stay in your consolidation range, low, high, waiting for it to break out of this consolidation here. So you can see as you start to expand it wider, you move this into a 2-minute chart. You'll just say, okay, well, I want to see it break out of this 2-minute consolidation, then 3, then 4, and it starts to open up wider. So you get this kind of thing where you're stuck in 1 hour candle going, now what are we going to do? We're starting here 11 o'clock now. We're still in that macro from 10:50 to 11:10. Good for you, man. Good for you. I'm glad you're still working on it. I'm glad you're still eking out a system that works well for you. And I'm happy for you if that continues to work for you. If we're looking for that 4-hour, remember the 4-hour one here? So we're back into that 4-hour, tap that inversion on the 1 hour again. We're back to this 4-hour candle, mean threshold, reacted beautifully off that, pop back up into the order block, into this near the mean threshold again. We're getting a nice reaction off of that. Now you want to see this give way back into here, which is going to take these lows out. We're expecting lower prices. Are we finding support at that? Yeah, we've got lots of pool of liquidity sitting up here. Are we going to take one more run on that? That would be the leg that takes out the high, then start coming back down. Or we come into 50% of this leg that is your trendline phantom. Take out the trendline phantom to here. Look at this candle right here. Look at that right there. You see that little tiny sibby or bissy right in here? Blow through it. Lovely. You want to see this really give way now. So your trendline phantom's been blown. Discount array here. Look for this fair value gap to fill. Cody's planning to relocate there with my wife. My work is there. No hope in Bosnia. Complex politics, blah, blah, blah. Yeah. Well, I hope that Austria gives you a whole new lease on life, my friend. I really do. It's a tough world out there with the politics as they are. Look at these equal lows here. If we can find some support off these, continue pushing down. Also this order block here. Mitigation doesn't take out that high. So if we come back to mitigate here to drive down lower. equal lows and that fair value gap here. Here's the squabblers. Squabblers who wants to make the low a swing point here. So they'll go up and back and up and back. The next few candles they'll try to make their own little individual highs and lows. So look for this guy returning to here. Excellent. Look for the body now. Got the body. Inversion. There's a little tiny inversion or a little price imbalance. You see it right there? And there's another one right here. And there's a little fair value gap up there. We could run all the way up inside this. Mitigation. Premium discount. What do we got up here? Oh, I like this idea. Oops. Let's do it like this. %. We just popped over into the premium array. I think we still got more upside we want to do first. So you got 62%. And this would be nice right here. So we've got premium like arrays. I'm looking at like arrays here. A like array to like arrays that are above 50% here, here, here. So kind of keep your eye on this area and these little tiny guys along the way. We'll just have a look at how price is forming and we'll see what kind of reactions we get off of these areas. This is a SIBI, which has now become an inversion. Again, discount array, premium array. So like to like and like to like. Up here. There you go. We're inside that one. Remove that. Order block. Rejection block. Right to rejection. So if we start to really blow through here now, look for a rejection block on this side. Basically we came back to the order block here, hit it. See how the body's respecting the open? So this order block here on the downside, like array to like array. If we find support off this, look for higher prices, look for these equal highs again. But if we're inside this range, look for the premium and discount array there. We closed above that little tiny inversion there. We've got this order block here, support got validated above there. See how it popped on it? Now drive through it to get to our discount array. If you find support at it, I like that idea as well for further push for the upside. Otherwise we're starting to compress again inside there to there. And then when as soon as we break through this candle, we'll be between this candle here and this candle here as well. And we're starting to compress. So that order block there is nice. If it just starts running above that, that's our step. And then step, and then step, and then start looking for higher here. And yes, you can flip-flop back and forth. You're in a consolidation. What do you expect? You can take it each direction. So if you stay inside these ranges, you can stay on the horse a little longer. This is not a valid order block yet. Still looking for like array to like array. We ran this premium SIBI, this discount BISI. I would like to see that go through there and just start coming right into this little area here where we had, was it this guy here? Yeah, there's a little tiny one in here to here. We ran through that, so I'm expecting it to run through that and get into a rejection again. There's like arrays on either side, so I'd like to see this guy start to really push through. Now this is a valid order block. We just wicked below it. That's valid. Inversion. Keep pushing for here now, here and here. This is the same kind of thing that was happening up here where we got our like array to like array. It took us for a long time to get there, but we finally got there. This may be a similar situation. We're looking for this candle down here now that we've got that one there. Chat is disconnected. Wait while we try to reconnect you. Successfully reconnected. I'm going to take this one out of here now because this is we've got lots of little inversions along the way here now. So you can't say, well, this one that was way back here is the one that's really driving price. Stay with the most recent one. This is the higher time frame hourly, I think. Yes, hourly. Keep your eye on 18,032. Or 18,042. It's a lot of work, that, Mr. T. It's a lot of work on your idea there. Trying to find your source. So yeah, it's a lot of work, but I think once you've cracked that idea, then I think you've got yourself a decent setup there. Judy Ross, how are you doing out there? Where about part of the world do you hail from? That inversion, see how we've just keyed off the top of it again? It takes a lot of mental focus to stay on each candle. As you can see, I've kind of just drifted off of it right now because we're in this consolidation. So to stay on each and every candle and where you're expecting it to go, you got to give your mind a little rest every once in a while. And wait for something significant to happen, because overall we're in a midpoint of this whole range again, and we're just obviously getting a lot of high resistance on a Monday. Not a lot of action. Houston. A couple of people from Texas. Now, Houston, if I remember correctly, many years ago I was down in Corpus Christi, Texas. Went back to Houston. I think it was Houston or Dallas. Took an airplane out of there. And isn't it the one that they have this, like an elevated highway? Is that Houston or is that Dallas? That has the elevated highway, and you can, it's like a, I think it was, obviously quite a few years ago, had a lane you had to either have somebody in the car with you. You couldn't drive alone in that lane. You have to, I think that's how they did it down there. I got a cousin who's coming over. They think that, oh, we in Canada, that we walk around, we have guns everywhere. I'm like, no, that's the States. Like Houston, you guys have like an open license carry, or open, what is it, open carry, visible carry? I can't remember what it's called. Up here we have just foul language and a handshake. That's pretty much it. That's what you get up here. We don't have a lot of guns. Handguns have been banned now, so we don't have, if you've got a handgun, you're grandfathered in. Sammy J, Dallas. Oh, it's Dallas. The HOV. Hovering. Is it, what is this? Oh, HOV lanes, high occupancy. Volume, okay, 2+. Wow. And it's one of those, I looked at that and I thought, man, you better make sure you're on the right side of that, because you can't turn around on that lane. That elevated highway, that's it. You're one direction, baby. You're stuck in that. Yeah, my cousins, like, they're coming over from England in the summer, and they think that we walk down the streets with guns strapped to our waist. We're all cowboys out here. It's like, sorry, you're going to be really disappointed when you come here. We do have lots of cowboys out here in Alberta, and you do see them walking or riding down the side of the road on their ranch. You'll see them riding with their horses. Every once in a while we get to go out and participate in a friend of ours. They've got a ranch nearby, and we get to drive the cattle. And but I'm usually sitting in a gate or driving behind them. I don't have the back to be able to chase a cow. And we got all the guys that are on horses, and these guys know, these horses are like, the horse knows exactly what the rider wants. You know, I swear they look at the cows, and even the horses know what to do before the rider does. So they got some really cool cowboys out here. So we get to every once in a while move this herd from one field to another field in the summertime, and it's quite the ordeal when you have to shut the highway down and drive the herd across the highway to the pastures on the other side of the highway. It's kind of fun. But yeah, my cousins think that everybody's packing here. Like, we don't pack anything here, except maybe breath mints. That's about all we pack here. But you guys have open carry down in Texas, don't you? See, watch this little piece right here. Look for, just to see if there's sensitivity off of that. Nope. Look right here. That's the area of sensitivity. Next one. Inside there. Kind of reaction you get off of that. See that little imbalance we're looking at right there? That's the little, see how it taps it? You can drive through it. Now I'm okay, but I just like the idea that it tapped it like that. A little tiny imbalance. So these are the kind of things you got to kind of keep your eye on, right? So we have premium array, discount array, like array. We came all the way up into like array here, came all the way back down, formed this guy here, came back up into, oh yeah, we're still waiting for the rejection block, sorry. Here you go, now you get it. So we've got for rejection block, from this range here, we went all the way up into rejection, like array to like array, rejection to rejection. See that? And it's back inside a 1 minute fair value gap. Right off it, see how it tapped it? This stuff has got to awaken you folks to this sensitivity. And those, I'm preaching to the choir. I know all of the ICT people out there, but I know we've got a few people in here that have come in from some of the other channels that I've kind of, I pop in to try and share some insights with. Those of you people who are coming in from Facebook and some other different sites, you got to be aware that these are true areas of sensitivity. Like, you cannot say that that's not an area of sensitivity. We've marked it out. And look at it, it's right on the money. And it's moving now from discount. We went from rejection to rejection. We did not take out the low. We did not take out the high. Rejection, rejection, hit it. Now we're hitting off of a key level of support here. Looking for a smaller range. Premium array. Now we validated this as a discount array. Keep in mind these guys over here, this inversion over here, and always look back even further. We cut through candles. That's with ICT concepts. We cut through candles. We do not just take the candle behind us. That's what separates us a lot from retail, is that we cut through tons of candles. And they say, well, then you're form fitting it. Well, okay. Tell me I form fit that one. I cut through that candle and that candle all the way back to here. And why did it bounce off of there? Was it a logical level to reach for? Absolutely. But we were calling for a rejection block here and here and had to weather all this before it finally hit it. So keep an eye on this. I tell you, you're going to see a level of detail unlike anything you've seen before in your charts. When you start analyzing candle by candle, it's the algorithm reaching for array to array, premium and discount. And look at this. It's the people that are sitting in an hourly chart right now are just like, oh my God, it's not doing anything. We're going side to side. Well, yeah, we can see what arrays it's still reaching for in these smaller 1 minute candles. You can see which ones they're reaching for. You wouldn't have seen squat over here in a 1 minute. 15 minute, all you've got is this order block here and that order block there. You've come down to that. You come back up to that. So you've hit them just in that one candle. So you're running out of arrays on a 15-minute candle. Well, now we're down to a 1 minute. You get into 1 second, you'll be seeing the same kind of thing, hitting arrays, high and low, premium, discount on a 1 minute chart. Or sorry, a 1 second chart. Love our Second Amendment. Depends who you talk to. Yeah, that Second Amendment sure gets a workout in terms of its interpretation and what people seem to think that your founding fathers actually meant by the Second Amendment. It makes you wonder about how they would have worded that had they known what was happening in the future. Look at this. Premium, discount. Like array, Split this one in half and see if this is a like array. What am I looking for here? Okay, yeah. $27 turn. Remember the 27 over here? I think it was over here. There's the 25, 27. Crazy Ivan. There's your Crazy Ivan before it ran back down. Here's your 27. Crazy Ivan. We start getting into a Crazy Ivan up here. Turn around, come back down. But you still got lots of liquidity sitting above you here. So keep that in mind. You might see one more push up in a wick. I'd really love to see this just go slam-o all the way up to that order block right there. One more time inside that 1 hour inversion and then book her down. You see we've got wicks that really, they're trying to probe the higher on the hourly and they're trying to probe lower on the hourly, and you're stuck inside this push down, push up. Which one are we getting we're trying to reach for? So you get down to the 1 minute, we're into that consolidation again. We have a small consolidation here. You break down, come back up to it, start running down into rejection and aiming for lower prices. This consolidation, that consolidation, all of this is consolidation. What's your consolidation? This piece, all of that, this piece, return to. So if you use that piece right there as consolidation, you run up, you come back to it, find support at model 1, running for rejection block. Always, and if you've been with me before, you know I love rejection blocks. Before I take out a high, pay yourself at rejection blocks, especially in high resistance liquidity. Any type of consolidation, always take out at the rejection and not the high. Anytime you're trading a consolidation from one high premium to a discount, just go to rejection block. That's why you kept hearing me say rejection to rejection several times. Rejection to rejection. Take that before you go for the highs. So as you can see in here, it's kind of hard to say which one of those am I going to pick as my rejection and which or consolidation, and which model would I be content enough to use to support price for a quick little snipe for some cash. Again, no leg that takes out the high. Sorry, where am I looking here now? 32. High here. Okay. So we've now cleaned out this high here. We want to see a body take that high, not just a wick. If we get a wick, take the high, come back down below the low, look for this to be the inversion for the next low. We'll call that before it happens. If this stays open and we have one more candle that comes up above it, we don't want to see it close in just yet. If it does, then I'm tossing this idea out the window. Okay, forget that. Wait for something new. Just waiting for a setup to be created now. Look at your highest closed candle now. The big beefy high closed candle, which is this guy right here. Look for the mean threshold of that candle to hold price. If it doesn't, we're inside this candle right now. You could say we're inside this one if you want. I'm alright with that as well. It's this fair value gap order block. It's a breaker actually, because it's a last up close candle before a run down. It just happens to be inside this big bold candle right here. But this one does not take out a low. This one does. So you could say mean threshold of that one, or this breaker right here, mean threshold. See how it's holding price right on the money? And I don't want to form fit it. I'm just telling you, a breaker's a breaker any way you want to look at it. up close candle, swing point here, up close candle, last up close candle before run below an old low, old low, old low. That one there runs all of them, or at least that one before that swing occurs here. So that's a breaker. We want to find support off of a breaker. So now if you start to go breaker to breaker, we're looking for these two candles down here. If this one holds, look for price to return all the way back down into inversion, or sorry, BISI, and like array to like array. Breaker to breaker running. Now, if we've here's another thing that can happen is we've now got a run above a high. I'll look to see a body break this here for a break in market structure to the upside. If we get a body trade up, then you're looking for the new candle, which is here, or this breaker runs below these lows right here. Trade back into that, find some support, and push higher. We have a small swing point here, body breaks it. This breaker here, breaker to breaker here for support on a higher run. If we're looking to stay inside consolidation, you're looking for a run back into here. So you can argue two sides here. And we've already taken some liquidity up here, and you say, do I want to take more and pair it up with liquidity below the market, or is this good enough to pair it up with order block here, sorry, breaker here, or really dig down now and start reaching for these lows here? So like array to like array, or like array to like array. Consolidations, pick your poison. Order block validated, get below it, come back up, find support. You want to see this start digging down lower now. People like The Purge. Oh yeah, I've seen that show, The Purge. What a weird dystopian type of world that would be. Is there a good book on ICT? Wanting to learn. Yeah, he's actually writing his own. He's already written a book, sent it off to the publisher already. So you could purchase his book. I don't know what kind of learner you are, Judy. Whether you're visual, auditory, kinesthetic, if you're a combination of those. There's multiple different types of learning styles. There's a series of, I'm going to go off on a tangent here now, and then I'll direct you to your answer. I'm going to answer your question, but kind of a long ass about boob way of doing it. If you understand your learning style, now there's, from back in the day, I learned that there are 7 different intelligences that we have. Now, this is all debatable, and some people may argue this, but it worked really well for me. You have your, first of all, you have your linguistic intelligence. That's your ability to be able to talk, use language. You love words. You love the way that things are formulated in terms of sentences. So the kind of people that make up your linguistic intelligence type people are your politicians, are your orators, well, speech people like Martin Luther King. Linguistic intelligence, huge. JFK, you know, those people have incredible linguistic skills. So there's linguistic intelligence. Then you have your mathematical logical. Those are the people who are very scientific, love numbers. And you find that those mathematical logical people, they love crunching stuff. So those are your accountants and scientists that have very good mathematical, those are the programmers, that kind of stuff. Then you have your, I'm trying to remember them all here now. You have your body physical. Those are your martial artists. Those are the people that like hockey players and people who are really good at physical thing, gymnasts. They know how to control their body incredibly well. Ballerinas, that kind of stuff, right? So those are your physical body physical. Visual spatial, those are your artists. Those are the people who can see and create images in their minds. They're dreamers, the people that can bring your ideas to paper. And then you have your musical intelligence. Musical intelligence is those people who you can listen to a song and within minutes they don't remember all the words to the song. You hear a new song, you say, how do you even know the words to that song? They just know it. So they tend to study a lot with music. So the reason where I'm going with this is how to find what your intelligence is. You may have one or a combination of these, and how you develop the best learning style suited to that intelligence is the best way to direct you. So I am going to answer your question, Judy, in a roundabout way. Another one is called your interpersonal intelligence. That's your ability to be able to recognize how you communicate with others. So those are your psychologists that understand that ability to be able to recognize a problem. So those are the people that can communicate really well. Your priests who can get more of a direct understanding of how people interact with one another. How well you may have a great intelligence to be able to, like women have this really incredible ability to be able to sense what goes on. You know, many times, and Judy, I'm sure you've been aware of this, you walk into a room and you can tell who's pissed off at who. You can read the room, you can feel the tension in the room. Meanwhile, your husband or your boyfriend might look at it and go, I had no idea that those people were upset. You think, oh, you walk in and go, oh, there's something going on here. Those two people are pissed. And you go, what? How do you know that? Do you know them? Do you know what's going on? No, I just have to look at them, and I can tell by the look in their eyes, their body language. They're very tuned into that sensory kind of thing. Those are their incredible interpersonal intelligence. People who can really relate to somebody else and what they can do. And then you have intrapersonal intelligence. Now, the intrapersonal intelligence is your ability to be able to know what goes on inside you, know what your needs and wants are. People that really understand their bodies, their own understanding of how they look at the world and how they can interpret their shortcomings, their strengths and weaknesses. So that's the 7 intelligences. I think I've got them all. So in a roundabout way to answer your question, know what your intelligence is, because Michael has produced for you an auditory. If you're very good at visual, you're an orator, so you like to read a lot of material. You're one person who can just sit and read a book and get all the information you want out of it. That's the kind of intelligence you have. Then, you know, Michael's got lots of PDFs that you can download. Don't, whatever you do, go buying it from somebody else. Michael offers everything that you need to know about ICT for free. You never want to have to go pay other people for his stuff. You have visual spatial, so people like to see it. I'm one of those people. I'm definitely a visual spatial from my art background, and I'm a very body physical guy. So I loved something like acting. When I was in acting, I loved it because it was a visual, it was auditory, and I got to express myself in a physical way, and you get to be any character you want. So when I was studying at paramedic school, I used to take like my sweater and I'd pull it over my arms and I'd act out a macrophage moving through the cells, and I'd have my little study group of people, and I'd be using my acting and my visual stuff and act it all out, and so that my friends who I was studying with understood the concepts about what it was we were trying to learn in school. So you got to get up and move around. If you're a body physical person, do not sit there and stare at a screen, because that'll drive you nuts. Those are the people that need to walk around. I used to have visual cue cards. I used to make these little cue cards because I needed sound bites, like little pieces of information that I could nibble away at, study. I'd have the answer on one side, and I'd have the question on the other side, and I'd test myself with these little cue cards that no more than 2 inches by 1 inch or something, just something to get one little point on. So Michael's got all that kind of stuff is on a PDF. If you like to hear his voice and you like to hear him explain it, kind of like what I'm doing here as I kind of explain each candle as it goes. If you're a visual person that needs to see that, he's got 1,000 videos, easily 1,000 videos out there. You go to his page. Sorry, it's taking me a long time to explain this point, I'm belaboring it a bit here. You have all of his stuff on the core content. I would suggest you go study all the core content on his page on YouTube here. Everything is that you need is there. Everything you need is there. Or you can just wait for his book to come out, buy his book, because he's got a lot of his stuff is in his book. There'll be volume 1 and volume 2 if you're that way inclined. So you got all your different learning modalities are all there available to you. Then you just get back in the charts here and you'll understand what it is we're talking about inside this breakfast club in the morning. Getting a chance to apply it anyway. Then Kirk says, meanwhile, Darren, NQ is finally on the move. Shut up yakking, he says. Let's get back to work. Let's start talking candlesticks here. So yeah, go to his website. Well, not his website. Just go to the YouTube channel. Look up ICT. And you'll see his face in the corner. Get all his material. It's all for free. You better get it from the horse's mouth. No use getting it from somebody else who's interpreting his stuff. And then go on to ictindex.io. And that is actually a AI that generates, if you have a question, you can type in the question and it will literally find all the answers for everything he's ever said. It will quote word for word what he said to answer your question, and it will give you a visual reference point on a video, and it will give you multiple different video inputs that you can go to get clarification so you can visually see it as well. So I hope that answers your question, Judy, and I'm sorry it took a long time to answer it. It's not just a good book, it's awesome videos, PDFs, and the book is on the way. So don't go buy somebody else's interpretation of it stuff. Did you say Michael Scott? Did I say Michael Scott? I hope I didn't say Michael Scott. LOL. Thanks, T. I told her no book yet that is available for purchase. LOL. That was a simple way of saying it. Sorry, my ADHD kicked in. You got more detail than you were probably really asking for, but I wanted to give you something that you could use, some extra little piece. I like to help people, so you tend to get the whole barrel of love poured your way. To answer your question, no, there's no book yet, but it's coming. How's that for a quick answer? Not Michael Scott. Michael Huddleston is the guy you're looking for on YouTube. Not my, if I said Michael Scott, I apologize. It's Michael Huddleston. ICT, Inner Circle Trader. Michael Scott. No! Let's replay. I'm pretty sure you said Michael Scott from The Office. No! No replay. No, I won't do that again to you. I'm sorry. I apologize. Not Michael Scott, Michael Huddleston. Did I say Scott? What the hell am I saying Scott for? Okay, so looking for a run up here. Again, looking for that blast up into here, into that up close candle here is what I'd like to see. That will be a breaker yet again. We have a last up close candle before a run. Big dive down below these lows. I would expect to see that as a level of support on the hourly. So slammer up into there. Reject off of there, clean out all this liquidity right now. We've just run all that liquidity out of there. We did not come back down into the rejection block, so this found support, closed above again. You see that right there? And we do pop down, tapped it, and leave. Wasn't precisely tap it, but it was tapping on top of the order block right here. It's open, hit it perfectly, and left. Now it's cleaning out the top of the liquidity here, order block. We go above it, validate it, come back to it, find some support at it inside the fair value gap. Mean threshold of that fair value gap, break above it, come back, find support at this candle now, continue to the upside. So you see how we're starting to get the leg, starting to find support at these order blocks, climbing up. There. That's my rather verbose run for the morning, trying to take up airtime. Michael Huddleston, S-T-O-N, not Huddlestone. Take the E off. Michael Huddleston, ICT, Inner Circle Trader. Correct, Amundo. Just take the E off the end of, it's not Huddlestone. 11:45 or so, Michael Scott, LOL. Was it Michael Scott? Michael Scott. I apologize, ICT, if I called you Michael Scott. Where the hell did I come up with that name? I don't even know a Michael Scott. I don't even know a Scott. You get lots of chuckles on that one there, Derek. Thank you. Michael Huddleston, Inner Circle Trader. That is correct, Judy. 100%. 100%. 100%. Michael Huddleston, ICT. There you go. Let me give you a this is what you're looking for, Judy. This handsome devil here. Inner Circle Trader, the ghost in the machine. And then you go down to, don't worry about all these action models here. Just get right down into all this core content. You'll see month 1, 2, 3. It'll go all the way up to month 12. You also have this 2023 and 2022 mentorships. A lot of people like the 2022 mentorship, the entire list. Those of us who started back in the day when he started making these videos, he made the core content. I like the core content. It explains things really well. But the ICT 2022 mentorship helps kind of give you a good overall read. And then I would say to you, every other video he's got in here, and there's hundreds of them. There's 614 of them actually. Do them all. And yet, you saying, well, Darren, that would take years. Exactly. Exactly. There's no shortcut. There's no shortcut with this stuff. If you want to know it and you want to teach yourself something how to fish for years to come, you have a whole plethora of bait, tackle, rods, lines to learn there. And then you can fish any way you want, in any environment you want. Michael Scott is the main character in The Office, the sitcom. Oh, is he really? Is that the one that the 40-year-old virgin plays? I can't even remember his name. See, my mind is, this is how I communicate with my wife. You know that movie? The guy with the 40-year-old virgin. That guy. Steve Carell. Yeah, is that the Steve Carell that plays Michael Scott? I think Michael Scott. Yeah, I probably said Michael Scott, not Michael Scott. Thanks, Abs. I think you meant Michael Scott. And the S kind of rolled into the got, Michael Scott. There you go. Thanks, Abs. I'm sure that's probably what I was meaning. We might have to play that back in my spare time and see if I meant Michael Scott. Yeah, I probably said Michael Scott. I couldn't imagine saying Michael Scott. Gotta go, D. I'll see you tomorrow. AM session was nothing good for me. Maybe PM session. Yeah, it's nothing. Let's just bash it around. It's a Monday. We're just looking for a little bit of love off the breaker up here. We might get something that we can actually trade off of here. But enjoy your day, Abs. We'll see you tomorrow, man. Enjoy your day. And Q is stuck in a tree. Kirk, this is correct. This is the cat in the tree, you see. You got to put the ladder up here, grab the cat. Well, we were asking for this. We're asking for a shoot straight up here to that breaker and bounce off of that and come back down. So this candle's low is 1860, and we're at 1859. We're one handle short of that candle's wick. Now we could come all the way up into the 50% of that wick, would be 1867, and find support. If we find support, we're going higher. Reject off of that, that would take this high out here, and then we'd look for one of those delicious little setups. The delicious little setup we've been talking about right here. We'd be looking for that up here for a short. So we'll kind of keep an eye on that. Now that you're all kind of making notes, I'm sure, about the different learning styles that you do. I'll be right back. Okay. Let me just see here for a second. Didn't quite get the top of it, but we wanted to rush back up there. It's hit it. Now this is a really nice reaction off of that. Or just one handle short. One handle short of our objective. But that's okay. That's what you want to see. Wasn't as precise as we'd hoped, but definitely the right idea. We wanted to run up above these highs here. We're looking for your entry, and we're looking for this right here. So we're going to get a body trade below that and come back up inside it, and we're just short of getting inside that little inversion there. So maybe we'll get a run back up here. Took the highs out there. Didn't quite take the highs out here though. I'd like to see this. If we get back into here, if we run this up one more time. Wait a second. Wait a second. So consolidation, return to consolidation. I do like the idea of this going higher. Model 1, right here for the consolidation we talked about on the weekend. Here's your Model 1 entry. Model 2 entry. Right here. And we didn't have one that takes out the lows, so just the Model 2 entries, all you got left really. Stop loss would go down here. Ideally it'd be better to be down in here because you want the mean threshold of that candle taken out. So I'll actually take this one here. If we get down into that little pocket there, I'll take that as an entry to go long. And then we're running for the breaker here and the mean threshold of that candle. The mean threshold of the breaker. Oh, you want to see it take the lows? I don't want to see the lows get taken yet. I want to see them hold run back up here into that breaker one more time, and then come down and blast through this stuff after lunch. My stop loss is going to be really tight here. I might just get a Model 1 entry and that'll be it. So if you get your Model 1 back into this range here, look at your premium and discount. If you're doing a quick snipe, look for 10 handles here, here, here. So you got 3 different exits here. Your premium array. Is right there. Anything above that. So in here is your premium, discount, 50%. Order block, validated, order block, tap, tap, multiple times. Get this one above here. Get a body close above that. Find support at this and start looking for this inversion right here to hold price and continue pushing higher. Like that. Start pushing higher now. There you go. I'm looking for a Model 3 entry on the hourly. That's what that is here. It also coincides with this run to here, which will be a Model 1 entry into a Model 3 hourly entry, which is inside a breaker, mean threshold, rejection block, fair value gap. The stop loss goes up here. You don't want to lose more than 50% of that range. If it does, then we're going higher. And this is the next pump up. So if we just see up to 50% here, roll over, come back down into this little 50% of that range, then look for, I would be looking for more upside again. If you're sniping, you're in lunch hour now, so be nimble. Don't go for the big long hauls, just take your 10 handles, move to the side, and just keep nibbling a little piece out. It's early in the week. Don't take any major losses if you don't need to. No, a little late to the party because of my university. Nothing wrong with being in university and learning, my friend. Good for you. So we can try a buy limit there. I just arrived. Sorry, no worries. You get here when you get here, my friend. Your education is more important. You can never go wrong investing in yourself. As a short. If that's the high, then I have to dump my idea and do this. So get ready to dump these ideas, this idea here. If I lose the midpoint of this candle here, then on the hourly, then that idea is not valid. But all the time I'm in here now, I have to say we have no real break in market structure. We just had this really ugly deep retracement here, back into a discount inside a large range here. We didn't really break this swing point here. We did break a swing point here, if you want to look at that as a a break in market structure. So if we're going short, look at the next price leg down as the potential from here to here. So if you can argue both sides, what do we say? You stay out of the market. So if we can get down into here, that's the rejection block. Again, I do like this idea here. So I'm going to take that just because it's a Model 2. And then I'll put stop loss right here tight. See if it goes, if it takes me out, I'm all right with that. And we'll see if it just takes me out with a wick or a full body. It drives down to the rejection block. Ideally, you want to stick your stop loss down here. Otherwise, it's going to run for these equal lows, which is what Derek's looking for. We'll see how it reacts off this 50% here. I start to lose my love for the run if the 50% doesn't hold and doesn't get back down into here. If it starts getting back up into here and closing this in, then I start to go, okay, I start giving up on this idea. You start to lose the idea that it might be going higher short term. That was it. That was the next potential price leg up. Or because we're marking time in lunch hour, we could be just coming up from premium to discount for the hour, run the high after lunch, finally reach up into that spot, and then drive down for the rest of the afternoon. So that's another idea I have for lunch hour. Finally take this high out after like the 1 o'clock to 1:30 run. Take the highs out, get into the mean threshold of that breaker or open of the breaker, reversal, come down, clean out all this stuff down here. So right now we've got support off of here, off the rejection block, back to the Model 1 consolidation, order block, validate it, come back, tap, tap, tap multiple times. You tap onto the body here now, the open, breaking above, order block, got above it now, come back, find some support at it, or at this hold high here. There's the body, continue pushing through your 50%. So now I'm stuck between, am I going to get support here and come back down, or are we going to blow right through like this, close this in? I start losing my idea for this down here the moment I start losing that piece there. So we're back into here, find some support. Now I switch to this inversion here. And premium discount array, you're between here and here. So you may go sideways for a little bit, bouncing around between premium and discount. Order block. If not, we want to see it get on top of on top of the 62% retracement with a body, tap it, and continuation on the upside. Start looking to take this order block out here. That being your run down below these little swing points. Not a super strong breaker, but by definition a breaker nonetheless. Or maybe not, because there's a swing point here. This would be the breaker. That's the swing, last swing below these lows. We'll see how that candle works. It's practically inside that guy anyway, so we'll see. discount array, premium array. So we're just kind of banging around in here now between premium and discount arrays, popping on either side of it. So look in here, you got this guy right here, order block. So we've dipped into this one. Now you can run up into this one, just above us here. Looks like Elon Musk just delivered another 17.5 tons of useful payload into the lovely atmosphere, or lovely space above our planet. Not that that's cluttering us up some more up there, but he's just dropped another 17 tons of payload into space. Had a little bit of a... They got their 24 satellites. They're dropping up there now. They're Starlink ones, increasing their coverage around the planet. Still banging around inside here. Good. Back to order block. If we lose this mean threshold here, my eye goes over here. And I'm just drawing these for giggles here. I want to know, see if it... my eye goes here, here, here. If we lose thresholds, if not, support support, continue pushing higher. Space is the new Twitter. It's pretty amazing when you consider this guy started off building something like eBay and is now sending rockets into space and has his own space program. That's pretty amazing. Pretty freaking amazing. Way to go, Elon. Yeah, we're still inside this thing here, so we're just kind of waiting for lunch. For it to break out of here. I feel some eggs on toast calling me. Where's the carrot? Maybe that's what it is. We don't have the carrot out there. Had we put the carrot, the algorithm is bouncing around, not knowing where to go, searching for a carrot, up and down. So now you've got this discount array, premium array. See what we're calling for here? And hit that one. That one. Starting to push higher. Good. Look for these old highs. Order block. Now we've got some support off of the order block. New order block. Come back, find some support off the old high, or have this thing close inside here, creating our little inversion here. And let's put one right here. See that? Support right at it. Carry on. Blow through this guy and this guy now. So far your Model 1 is supporting you for your consolidation Model 1 entry. If you're looking for an exit, here's your one of your first exits right off the breaker order block. Again, next one is your rejection block and high. Again, it's up to you whether or not you took it, but it's just an example of what I was teaching on the weekend for a consolidation. For Model 1. It puts the carrot in the basket. Oh. He's quoting some movie lines. I like movie lines. It puts the carrot in the basket. I think that's what he said to her, didn't he? It puts the carrot in the basket. It does this when it's told to. Hello, D. How's the day treating you? Oh, I haven't made any trades today, but it's been fun. The little teachings we did on the weekend. We just talked about this entry here for this consolidation. I was looking for a Model 2 entry. We had a Model 1 consolidation entry, and so far it's working out quite nicely. So I like to see that. That kind of helped reinforce some of the teachings we were doing on the weekend. There's your mean threshold. There's potentially one exit, two exits right there. The high, or we're going for the Model 3 hourly consolidation entry right there. Now this would be nice to see this take this high, what we're looking for, hit the objective I'm looking for up here, create that banger return. So you have that fair value gap above, take out the high, trade below it, create an inversion, trade back into it, continuation to the downside, aiming for Derek's objectives here. I like this laddering, this step approach. Inversion. Find some support at the bottom. Look at that, like right on the money. Doesn't that just tickle you? Don't you just smile when you see that? Giggle to yourself? Area of sensitivity. Love it. Can drive through that now. Come back to here. Just the fact that it taps on it tells me that on the lower 1 second chart, it's probably reaching for a PD array above it before continuing on the downside. Discount array will be down in here, old highs. Revisit this. We've broken above it. Come back, find support at it. I hope you took your pieces off like I told you with these areas. They are once again proving mean threshold. Take some off there, take some off there at the rejection block, because you may not get your high, right? You may get it in a minute, but if you want to reload on, like you want to take some off there, reload some back on here with a small stop loss that you've trailed up, you can do that as well. It's a sneaky way of pyramiding. Again, you got to trust your arrays to be able to believe that those are places you'd want to scale out at. But from there to that rejection block right there is 57, down to the entry of 20, there's 37 handles right there. Took us a while to get there, but order block validated. Drop below it, come back up, find support at it. We're kicking off of it. You want to see this candle close, we want to get above that one. And it's not even valid. Yeah, I guess it is. It's a wick though. Look for a deeper dip in here. What time is this? 27. 27:28. There's your turn. Drive it all the way up now, then do a crazy Ivan return, and then continuation. Next 5 minutes, drive it straight up into here. See what happens. When do I usually meet on the weekend? I usually just, Sundays I usually will sit in here, muck about in the charts for a bit, play with some bot stuff that I like to work on, answer some social media people, and try and set up a learning. I want to start trying to set up weekends, do a little bit of half-hour type modules, just to kind of reinforce what it is that I do mostly during the day. Ranges, and inversions, order blocks, that kind of stuff. So people got a bit of an idea of what it's a repeat, rinse and repeat that goes on pretty much over and over and over again in the mornings here. So anybody who's coming new to this, they'll see a couple of those little morning videos and they'll go, okay, this is generally what they do every morning. And they look for entries. Or what I generally do every morning. But if you want to meet up sometime on the weekends or something like that, John, to talk about some stuff, you let me know and we can arrange a time, meet up on Skype and have a discussion. If anybody else is interested in joining in, just pop into the Telegram account and we'll kind of get together a little community chat and kind of read the market for what we think is coming up in the following week if you want. Or we can all get together. I can do an interview with John or one of you guys and put it on the community tab as an interview. If you guys got a special setup you really enjoy, and it's something that you share for an ICT setup and you want to share it, then I can do a little interview with you if you like, and we can talk through your setup and you make a small little video for people to watch. So you can get your name out there too, so it's not just about me, it's about helping you guys as well. And if you want to kind of promote your idea or name or something like that, or you just want to share something, let me know. I've got lots of ideas for this channel and where I want to take it, but for now we want to get consistency and help people start moving their accounts forward. Not taking trades for them, not giving them trades, but hopefully showing them how to read price action and see that there's an element of precision that can't be found in fundamentals. The class is usually, I don't have a set time for it. I usually just, if my wife says, oh, I got some work to do for school, I go, oh, good, it's time to do a class. It's good. It's time for me to get out there and make a trade, make a video. Look at that. It just popped above there. See that? It moved in half a handle. We were one handle away before. Now we're half a handle away. That's funny. Just run above the highs there. See that? And now it's moving back into the range again. That's great. That's great. Still not going to give me that one up there. All right. 32. Is this the Crazy Ivan into 36, 38? And then it will continue back up. It's the bottom of the hour. Crazy Ivan. Continue forward. If Crazy Ivan sees you, he's on the way back down. So yeah, if you guys, Sandy, you guys want to have a chat on the weekend or something like that, on a Sunday, we can set up a time. I know you guys are all over the world, and it might be a little difficult for you. And I thoroughly believe in spending time with your family, not just obsessing over charts as much as I have. You can see they're doing a big dig back now. Look into this premium discount. What kind of premium discount arrays have we got? This breaker here, nope, didn't run above that old high. That one took out the highs. It's in the premium anyways, so I guess if you're looking at the parent run, this would be the candle to reach for. If that candle there doesn't hold price, look for the mean threshold to give way. If it doesn't, look for a run back up into that order block there. Mean threshold or consequent encroachment of that candle, and also the range. Yeah, if you guys want to set something up anytime, I love the markets and love to talk. Haven't used Skype much. I'm not sure if we can do something on Telegram. I think you can do something on Telegram. We can have audio chats. I don't know if we can do video calls on Telegram. If we can do that, I'm game to give that a try, so that it's open to anybody on the channel. But the Breakfast Club is available on Skype. I posted that on the previous video. If anybody's interested in getting in on the Skype channel, just let me know and I can put the link on the side here so you guys can use that as well to get in, if you so choose. Filling fair value gap, coming back up. Range, premium is up here. If you want to keep climbing up here now, you want to start getting back up into here. You don't want to start digging through this thing. You want to keep finding support, push higher. That's your line in the sand right there. You start giving up this candle and you get on the other side of it. Now we start to look for slight break in market structure, come back up, find some support at this and continue pushing through. So basically you're between here and here. If you give that up, then that kind of helps reconfirm that you have a break in structure here. Back down the other way inside a smaller or longer range. Then you got this candle, then you got that candle you got to eat through. Looking for support inside here, looking for support inside that. Right now we've just come inside the fair value gap, tapped it multiple times. We trade through it, come back into it, find some support. See, now we get into the mean threshold of this. So now if we close below, come back, find support of that, then it again further reinforces another drive back down into a much deeper discount. Yeah, I can talk about this for hours. I used to get together with some friends down in Phoenix in California on here every Sunday. It used to be a standard thing. I'd get up in the morning, 9:30, and we'd go till 2 o'clock in the afternoon, sometimes 3 o'clock in the afternoon, just talking about bots and how to read the market and how to develop a bot around what we were looking at. Now, I don't even like MT5 anymore, so you can dabble around with bots in MT5 still, but if anybody knows how to use PineScript and create bots in PineScript that actually trades your account, you let me know. I'd like to learn that one all over again. Otherwise it's FXtrema that we usually use for building bots. So Sundays, man, I used to love chatting away on Sundays. So anybody's interested in chatting about charts, I love it. Wow. I'm watching some people on Twitter or X here and their interpretations of reading the market. There's a stark contrast between some retail thinkers and how they think about reading the charts, and they have a very macro view about a micro movement. It's interesting. So see how this order block mean threshold is bouncing off the mean threshold here? Coincidence inside of an inversion. Are you seeing some resistance there at that? Coincidence? I think not. Order block. See how we had bounced around off the mean threshold, came back to the next highest order block right here. The low of that order block. Back, bang down. Now it's kind of stuck in here. It's got to go. I got to do something. I got to get to this mean threshold here. Back into the rejection block again above, or I've got to start driving down below these equal lows I've created, engineered here. So I've got to start digging down into that little piece right there. My eyes are still over here. Lunch hour, right? Take this out at lunch, come back down. Give people this false sense that we're actually going to run for old highs again. Then reel them in to rejection block, even that at 82.79 or 80.80. Turn around and just hammer it right back down again. These are just wicks that will go up here. The bodies won't reach up there. Just a wick, like a shoot up wick. Turn around, come back down. Hydra did a nice trade this morning. I think he took one off of here. He took the consolidation, returned to the consolidation, took those highs there, and he managed it all the way up. And he did a nice little stop loss management all the way up. His little drawn liquidity was up here, so good for you, Hydra. Well done. Back into the order block, further downside. Closing right below, just below the mean threshold of this candle here. gonna go get some lunch. I think we're going down to those 3 lows. All this stuff down here. Yeah. I would like to see one more pump back up into here. Clean this up first. If we're going to go lower, I want to see that breaker get hit one more time before running. And then this is just like your targeted liquidity after lunch. But right now you're still supporting that idea, Cody, of going down. Support off that inversion. Continue down. So that will be your objective if you're to support that narrative. Everything's working out in your favor right now. To continue heading down, you got to lose this mean threshold here. Lose that guy there before you reach all this lot down here. You got multiple different arrays to discount arrays to reach for yet. That you might get support and turn around and come back up into higher arrays. I like the idea that they're engineering this false run up and then slam it down after lunch. Elon's just posting this thing about his Cybertruck. Somebody's trying to break into one of his Cybertrucks. And he's like, good luck. You ain't breaking into my Cybertruck. Somewhere in California, there's a video footage of a guy trying to break into his Cybertruck. He's trying to smash the window and it ain't working. You're not going to break his glass. So he's jumping on the roof. And he's like, nope, you're not going to get into the Cybertruck. And the guy just drives off, giving up. Good for him. So here's your mean threshold again. You want to see it drive through that? Start getting back down into these little pockets that we've been talking about for a while now. I wanted to see them come down here before taking that high. But now they've taken that high. Here's your discount array way down here. From here to here. Once you blow through this here, the midpoint, if we're not being supported to go higher from that mean threshold, and now you want to see this range hold here and this not get taken out. That would be a nice little another layer of engineered liquidity inside here. So you got highs, lows, and all this stuff down here that people are thinking is all support. That's Candyland down there, but if we engineer more liquidity inside here, then that little pocket to run to, my funded account is still going. Thank you, Cody. My 60K account, I haven't even started the challenge on that one yet. was hoping to get started on that this week. When things clean up a little bit here, we can start getting in on something good. This candle and this candle. You're finding support. You got to give way here now to push lower. Order block, drop below it, find support. Your steps going down. $50, $52. Yeah, it looks like it's gonna eat those lows. Yeah, I agree, Cody. Definitely that could happen for sure. So look for the little pockets of liquidity down here, the imbalances. These little imbalances right here. See how we hit the edge of it already? You got the little imbalance below it. And then you got this little bissy here. We just ran that low. That'll be just enough to tap the high of it, and then just to run out that low and then start running back into the range again. Look for 50% of this consolidation. That would be, remember we already got the first one, the consolidation. You got it right there. You had one more opportunity to get on it here. Oh no, I guess this, if it depends if this is the consolidation you're pulling. You break above it right there, come back. There's your model 1. All the way to just taking you out there for a nice little run here. And now you've run down into model 1 again. But I don't know if I would run right back up to here just yet. You might have to go to a model 2 with a really tight stop loss. But when you look at the liquidity, like Cody's saying, is sitting right down here with a little pocket of fair value that's not touched, and the original consolidation that's down in here, you might go, oh, I'm not sure yet. This might be coming back for this consolidation and 50% of that range. That's a model 1 and a model 2 that happened on that consolidation. Right? Model 1 entry for long. Model 2 entry, I don't know if that's 50% or not. From that high to that low. Nope. We're not even there yet. Just a model 1, and then a consolidation with a model 1 again, right here. Really low leverage if you're doing this model 2. Wouldn't suggest it, but hey. If you're brave, off that one. You did clear out the highs. Premium array to discount array. We've cleaned out the high. We've cleaned out the low. So like array to like array. See? It just popped above it. We've just popped below it. If we come back into that range, again, you've just seen another example of array to array, premium discount. like to like. Just got my first payout from Top Step, 2K. Plus refound challenge activation cost of $149. Oh man, Kirk, I am so happy for you, bro. Good for you. Good for you, man. Good for you. $2,000 in your pocket, and the money that you put in, now you're trading free cash, somebody else's money. Gotta make you feel good, hey? It's gotta make you feel good, Kirk. Good for you. Man, I love that. I love hearing that. I love hearing it, man. Congratulations. We're happy for you, Kirk. We're really happy for you, man. Congratulations. Well, gotta put it up there in big bold letters. Well, Kirk's the winner. Kirk. A winner. I put chicken dinner in there too, but I won't. Way to go, Kirk. Yes. $2K. Woohoo. And I'll try and get it all excited. Well done. Well done, Kirk. Well done, my friend. Well done. Okay, so we got our swing. We got our consolidate, or our little fair value gap here. We've now traded above it. We're coming back in, finding support at it, looking for continuation back into the range now, or does this mean threshold hold price? That's the tough part. You have a swing point right here, mean threshold holds price, and look, we're driving back all the way through it again. When you get into these smaller consolidations, here's where you get beat up, and you'll hear this switch back and forth, like, oh, now I'm long, oh, now I'm short. It's not because you can't make up your mind. It's because the algorithm is bouncing off of arrays that support a run up, run down. You don't know which way it is. It's running out of arrays, so it will go from one to the other. Extend, you think, okay, now it's going long, bounces off of that and comes back down into a nice smaller or larger range. And you've got this one, then you've got that one, then you've got the big one across here. So look for order blocks. See that come all the way back to the body there? Nice snap off of it. Inside a little inversion or little imbalance right here. Snap off of that and start heading back up again. If not, you're looking for this low, looking for this imbalance right there to fill, which is just a small fraction away from filling it right there. And then you got that little pocket I've been talking about for the last hour or so. Derek Super at Derek Kirkis. Yeah, isn't that awesome, Derek? I love the fact Kirk's kicking ass here. Kirk, I owe my current understanding to this channel. Well, you had to pull the trigger, my friend. Good for you. You had to pull the trigger. All right, now we've run into it. Mean threshold. Snap off of it, or are we going to drive down for the lows? See that order block, mean threshold, held price. We'll go, which way is it going to go? It's got to break out. Whap, oof. Straight down. Nice. Order block here now. Yeah, I'm happy for you, Kirk. I sincerely am, man. Kirk, any tips on Top Step? Sammy wants to know. Oh, Mark says, thanks for live trading. That needs guts, rather than those PowerPoint traders who are scared to show it live and just share it after the fact. Well, you're welcome, Mark. I'm glad to be in here with you guys. And one thing you'll learn about me is I don't care if I'm wrong. It just means I just fell off the horse. I'll get back on. And as you can see, we can stay on the horse for quite some time if we want to. But thank you, is very kind. Oh, I didn't see your comment, Derek. Thank you for that. You watched the little commentary this weekend. Good. I'm glad it helped. If it helps people, I'm just tickled pink. Just means the time I put in and the effort I put in, people appreciate it. I love that. Thank you. That's all I need is a little thank you. I'm happy to do more. And then I get really chuffed when I see someone like Kirk haul out $2,000 and feed his family, feed himself, feed his future. Pay it forward, Kirk. Pay it forward, my friend. Nothing makes me happier than to know that you can pay that forward and help somebody else out along the way. Just remember, whatever help you get here, somebody in the future needs you to help them. Whether it's now or 10 years from now, remember this. Remember this moment and help somebody else out along the way. That's like little ripples through the universe. If I can help somebody and it creates a ripple and you can help somebody else in the future because I helped you, and what a beautiful way to live. That's just music to my soul. So now I want to see, now that we've run into this little pool of liquidity in here, that's the 50% of the range. Now looking for that's Model 2 entry now. Model 1, run for the highs. Model 2. I love the fact that you're reading it, Cody. I love you reading it, buddy. Good for you. Don't get too confident on those highs getting taken out just yet. Stay on your PD arrays. Look for constant support for that objective. Because if it turns on you and all you focus on is 10, 15 PD arrays away from you, you wonder why it collapsed because you missed it early. So stay on your target. That's your candle. That's a nice objective to support an idea you have. Stick with it. I like that. I like that idea. And that's, I'm going to try this. I'm just going to go long here just because it's a silver bullet entry at 1 o'clock here. It's a 1 o'clock silver bullet. That's why I'm going for this. And I like Cody's idea here. So we just want to see if we can maintain this idea now. So now I'm just going to manage this carefully on the back end now. You're looking for a 5-minute fair value gap? Good for you. I'm going to go for my idea right there. Kirk, it's not top step specific, but don't over leverage and trade your model and repeat. It will bring success just nice and slow. The stop loss right now, I want to see this keep climbing here. Ideally the stop loss is going to go here below this inversion. Now that we've taken it all out, I'd like to see that stop loss go right here. Consolidation. There's a leg that takes out the consolidation. Not really a consolidation. No, it's not really. I'm trying to form fit something here and I can't. The number 2 model is paying off right now. So, and we have a number 2 model, which would be a better entry with a silver bullet entry at 1 o'clock. For a run for the equal highs here. But keeping in mind, we've got a breakaway, we've got a propulsion candle here now. You want to see this propulsion candle hold price. But this is what Michael says, don't suck up your stop loss too fast, because it can come back and revisit this before running back up. This price leg that's starting up here right now, ideally I want to see it form, like break above here, hold, tap into this, create a little swing point, and then have that next leg up higher. So that's kind of like how I'm explaining it as it's forming, so you get an idea of what it is I'd like to see in terms of a next price leg. So ideally I'd like to see a kind of a price leg like this, and then a run right there. So this one will stop here, get another candle forming a wick, swing low here for the run back up higher. We'll see if I'm right. Anyway, it's the idea I'm looking for. Pick one lower or higher, whatever you want. Cody's having a good old time this morning. Sending love, my friend, sending love. Now, because I want to see that price leg going up, I don't want to see my stop loss get taken. Ideally, I don't want to see it get lower than this. That's the little swing we're looking for. There you go. Now you want to see it start and go back up. Then I can move my little leg here. So far it's doing what we want it to do. Order block inside this inversion. Can come down to the bottom of it. Create the swing point here if it's, what is it? 14, 11, 14. Yeah. Yeah, it could run down into here one more time below here. That's why Michael says don't suck up your stop loss too fast. But I have a narrative. If I'm wrong, I'm still going to make 15 bucks or pay for my trade, and I'll get back in on a revisit of this inversion here. React off that. Now I want to see it react off of here, start going. I don't want to see it start coming down some more then. We've traded below this thing. Here's where you start getting your little doubts. So now that that candle's above there, my stop loss goes right here. It should not break that low. If it does, then Cody's right. We may run down into here. But that silver bullet entry now, we've come back down to the top of, I guess you could consider that a consolidation with the price leg down, another Model 1 entry. So I don't want to see it. There's a little tiny imbalance you could see there. It came back into that, which is fine. But if we revisit the low here, then this collapses for me, and we might get a revisit of this. So this now becomes a full body above this order block. I want to see that provide a level of support now. And I don't want to see that low get taken, and this is the next price leg up that we're looking for. And if we call that on that price leg up, and all this we called, you're starting to get magic. We're starting to see some magic. If not, it'll come down here and take me out. So much for my magic. I'll throw it away. I'll throw away my magic wand here. And I'll just move this up here to get this out of the way here. I don't want to lose the mean threshold here. We've already traded below that inversion. Then back up into it. So I don't want to see it come down here again. Yeah, that's not a good place to be. We could come down some more. No, I'll just let it take me out. I'm in a zero stress trade, so I'll let it go. There we go. Back to revisit this one more time. Look right here. See where this candle closes. If that closes, nope, it's down. That's why you manage it tight. Watch yourself, Cody. You might be safe, but you're closing through the middle of this candle here. You've lost the mean threshold of this. I'm glad I got out of both of those, my live trade and that one. That's why you have to have a rule that says, I don't like this. If it bros through that, that's my rule. That's the line in the sand I want to make. Otherwise, yep, it could go lower and it could take this out. Now we're back into this whole range here right now with a big bold candle that's ripped right through your mean thresholds. So next target, your ass is next, according to Michael. And those lows are potentially next. See here, range, 62%. I bet you that's way up there, around 62% or so. That's why you could be careful how many PD arrays you call above you. Don't start aiming for super high PD arrays without having a backup if you're wrong. If you hold this out, if this works for you, Cody, I'm hoping, man. I'm hoping you've caught yourself a tiger by the tail. If that gets back up above your breaker here now, this bold candle, oh no, it hasn't, we haven't got below it yet, stand by. We got this candle here, last down close candle in this little swing here, that breaker running above these highs, that high. Look for this guy here to potentially screw you over if you're not careful. So your idea that you have a run back up to the mean threshold of this order block, you want to see that give way now to continue up running for these, to support this further higher narrative. We have to lose the mean threshold of this candle. We came up to it, then we traded down. Then you say, okay, now we're in this inversion. I want to stay above this inversion. I do not want to get below it. So at the moment it trades below it, you go, crap, I'm on the wrong side of this. When it trades back into it, you can get out there for a little bit more profit, or you say, my line in the sand is this order block. I do not want to, now that I've traded below it and I came back into it, if I start going below this low here, then we're supporting a downward run off of the mean threshold of this candle, which was just a simple retracement for a further drive down for these lower lows, this mean threshold again. You know what I'm saying? So you always got to think about both sides of your narrative there. Is it supported? And if it's not, then you have to be able to prepare to take out at a point that you say, well, when does my narrative fail? That objective we were aiming for, when does it fail? Well, it fails when we start closing below this inversion again. Now that we jumped into it, great. Do we find support? Oh no, we're losing it. Crap, back to the mean threshold. Don't want to lose that. And if you do, then you say, well, you could start saying, well, then I don't want to lose the high. I don't want to lose the open. Oh, I don't want to lose the mean threshold. And then it said, I'm eating through all of you in one candle, in one quick swoop. I'm going to take you all out. So right now you're between here and here. We've got a swing point, down close candle, up close candle. You're finding support here. Drive back up. Now, if you're in on this for a short or a long, you might want to try and offload your position. If your stop loss hasn't been taken, think about your breakers just got hit. Now, if we roll over and you start running below this again, your stop loss here, mean threshold gets taken off of a breaker, perfectly off that breaker, and it's snapped off of it quickly. All those things would make me worried. So really you're between this candle here and this candle here right now. You're hoping the mean threshold of this holds, and that breaker, you want to see that give way if you want to keep going up. If that provides support, and that's just a lonely little old breaker against a strong piece and a weak piece. If the strong piece means threshold gives away, then great. You're back into the new fair value yet. See how we're digging into it already? Dug. All the way down to the mean threshold. All the way down to the mean threshold. Through the mean threshold, right near the rejection block. So this candle's really getting eaten. This breaker's only been tapped once. So does the queen take the pawn? One chess piece against the next. That's how you kind of chess pieces with candles. You assign a certain value with each chess piece, and you're thinking about which piece takes which piece. That one is stronger than that one, so chances are that one should give way. This should be the next price leg down. From there to there, from there project that down. See, there you go. Chess pieces, man, chess pieces. was the where logical place for them to go, take these lows. That leg continues down there. You gave back some of your money. Hopefully you understand a little bit of that. That seems a little clearer. The logic sounds a little clearer in terms of find, and I'll repeat this over and over again. You'll hear me say it over and over and over again, is find your model. If that's what you're going for, I was there with you, Cody. I was fully embracing those equal highs. But you got to start thinking, well, wait a second. In order to get that high, I got to break through that, and I've got to break through this. And if I don't, when does my rule for that fail? Well, if I trade back through this inversion on the wrong side of it, that's the big hint. I'm going, wait a second, I don't like that. We traded back into it. And they, that's my line in the sand now. Not still down here. All this is not supposed to support that run to there. This is supposed to support that run to there. This is supposed to support that run to there. And if it fails, get out, move to the sidelines and wait for a new setup. And then when you see that big pump down, look for the next pump down the same way here, off of a queen takes pawn. Breaker takes order block. Back into old low or new breaker, last down close candle before run above highs. Well, this high anyway. You're getting into that wick there. See that big breaker there? So technically you could come all the way up into here, that breaker. You wouldn't want to lose the mean threshold of it, which is a return to this breaker. But anyway, you'll see my point. There's a little inversion, a little tiny imbalance right here too. Order block. Stay on top of your... So my little alarms start going off, remind me new things are happening. Oh yes. Getting to the bottom of the hour now. The swing point. There's the 27 swing. Drive down. That little half a handle right there gave you one more opportunity to get in. There's only half a handle above that, but it's enough to run you out. And look at this. No, it didn't work there. I was looking at that there, but it did not take that high. That's why that one did not support. If we had this fair value gap here, had this one continued up and we had a body take out that high and then come back in, trade back into it here, that would have been the beautiful little rundown. So this first price leg is finishing off now. And it's in or about that price leg. To me, that's a finished price leg. You're like, how much you got there? Like less, like 0.75 of a handle. That'll come down and finish it. Back to our little inversion here. One candle at a time, Cody. Don't let it shake you off, man. Stay on the horse. An exit stage left. Heavens to Murgatroyd. You guys remember Heavens to Murgatroyd? You guys won't. Cody won't. Algo Cats, all you guys won't. I know my buddy Derek will. Abs will. He'll remember the old Heavens to Murgatroyd. If you watch Saturday morning cartoons back in the day, Snagglepuss. What a name. Snagglepuss. Heavens to Murgatroyd. Exit stage left. Step by step, candle by candle. Is that the Backstreet Boys? Step by step. Well, this is the 130. If it dusts these here, dusts these lows, come back into here, and we get a reversal, we're back into the 1 hour consolidation garbage. That's the fill of that fair value gap. So if we get a big swing of body close below that, come back up, start taking out some this inversions here, then you can get long. Then you can start heading for this Cody again. Well, it did what we were expecting from earlier. You hear me calling this and saying, hey, look, I would like to see it take out the high first. I wanted it to get to one little ideal place. It didn't get it, but it did take out the high. And now after lunch, we're heading for the lows. So basically it's done what we were asking it to do overall, and has given us some opportunity to grab some nickels out of here. Next price leg down. This is going to finish up. Back to the order block there. See that? Down, back, order block. There's a little tiny imbalance right there. Kaboom, hit it. Now we're going to continue to push through. Darren, gonna run. Still sitting here looking for the lows on the ES to give way. Maybe sitting for a long time. So golf is calling me with 60-degree temperatures today. Oh, that's all you get. Go for it, man. Go for it, my buddy Derek. Enjoy yourself, man. That's what it is. That's enjoying your. You spend some time in the market. You make some cash. You don't see it. No big deal. We'll be back tomorrow. We can make our weekly salary in one day, in a few minutes on a candle. So take your time, spend it with your family. I'll see you tomorrow, buddy. Double or nothing. I'm buying the lows, says Derek, or says Cody. Don't gamble on the low. Wait for confirmation first, Cody. Because this is the kind of shit that can happen. Blow right through you and take your stop loss out. Never try to predict a low. Not what we were looking for there. We're back into this order block here and this order block right here. So wait till you get confirmation. It's interesting the language you chose, double or nothing. Don't they use that in gambling? Isn't that a gambling term? Nice big wicks. Nice tweezers. Even though tweezers are fully equal on both ends. This is the syringe, the beveled edge of a syringe. Cody's like, I don't care, I'm long. I'm buying the lows. All right, so what we're looking for here is this to get taken out. For me, confirmations of breaking this, I need this candle to give way right here on an inversion, get support, then I'd head up there. But I wouldn't touch that until I saw something like that. We have our lows right here. That equal high there. Oh, here's the consolidation. We have return to consolidation. That's a model 1 entry for consolidation return to. Model 1 for this weekend. A big dip down into the 17,954 or the top of this, maybe the session open midnight candle. Look for a return there and then a pump back up. This could be a big deep retracement back into session open and then run back up in a year. So be careful on this, Cody. You want to see this candle give way for sure. If this doesn't give way, and this inversion now, you want it to provide close above it, find support at it, and continue pushing through. Let me remove that guy. I like the 2 probes, 3 probes down there. There you go. I'm with you on that one right now. So I don't want to see this drop below here. Gonna watch this very carefully because this could fail right at this order block here, roll over and come back down again. And I don't want to see so you watch carefully for this order block. You want to see this give way here. Ideally, I want to see it get above here, but I thought I'm going to take it off that inversion. You want to see this go blow through this. I'm a little too early on that one. A little too late. Let's wait for a return to here. That order block right there, that's what you want to see. Gotta lose the mean threshold. Yeah, you want to go up. You're just basically in this range here. And it's a 42, 42, 45. There you go. Come on up. Rejection block again. That's good. Push all the way through now. I'd like to see that just come down one more time. Get an opportunity to get long right in here. Off that little fair value gap. Premium discount array. And there you go. There's your next leg. Well, I think you'll get some more upside here. You just ran these highs here. So scooping some here, and here, and here, there, there. See all the PD arrays yet to be hit? 1, 2, that guy there. These ones, this one, that one, that one, that one. Rejection, high. There's tons of them to hit still. There's your close of your fair value gap right there. hope you're scaling out there, Cody. All these different PD arrays. Actually, what you do is your business, but if you're still aiming for the big stars up here, good for you. Make sure I actually get in there with this spread. That's taking the highs already. I'm going to wait. It's already taken that high. I was hoping to get this one to start scaling out here and here, but it's already been taken. So what would be my next objective would be order block, mean threshold. If I get some support, if we come down, tap this, or come down, revisit this, come back up, tap it one more time, then I'd go long for a new price leg out. Delete this one now. I probably just talked myself out of a trade, but I hope this kind of reinforces yet again, Cody, that you make sure you always pay your trader when your PD arrays are getting hit. Take a piece off for yourself. I know that's your objective, but don't forget, though, in this range here, that's a PD array, a premium array, and it's filled it perfectly. And it's retracing, so now you're back in this. So now I would have got long there. So I'm waiting to see what reaction I get off of this. I'll try it. %. There's nothing else down here other than this order block, so we can come down and tap it like that. I don't want to see a big dig down here. Stop loss will go right below the rejection block. I wouldn't want to see the mean threshold get taken automatically. Now we've got a body close below that, so ideally, if it trades back up into it, get out. Like that. Get out. That's the rule. I'll take the loss. Small loss, but I'll take it. That's the rule. Gotta follow my rules. I've just been harping on to Cody about following rules. Even if that trades against me now, that's okay. My rule is my rule. Now, ideally, like we said before, I'd like to see it close above that, come back and tap it. Then I'll put the stop loss down here. Right there. Give it one more attempt to get long. Right there. I'll put the stop loss just below the mean threshold of this candle here. Now, ideally, I wouldn't want to see it revisit this. If it starts coming back through this, I'll take out again. And we're in this big potential swing point right here. No, I don't want to see it go lower than that. So now we'll manage it from the back end, and all I'm trying to do now is to make sure I can get into a stress-free trade. If I can break above this high here, ideally you take a piece out, but I only got one lot on there, so right now I'm going to go into a stress-free trade here. I'm just going to go $5 up, because there's this order block here, this inversion here. We've just tapped it, so if we roll over and come all the way back down inside this range again, I don't want this order block here to get lost. We've already broke above it, came back well into it, traded above it again, came back into support. I'd like to see it at worst support right off that little tiny piece right there. If I stretch this out, you'll see it. See that right there? That's the inversion. I want to see hold price now if it comes down, so I don't want to see my my piece get out of here. So premium array, take your money, get out here. I'm going to get out there. I know it's only $200, but whatever. That takes my loss out of there. We're in this inversion here right now. So to me, come back to a discount array. If that breaker holds price, we have a swing here, breaker, right there. That's where I would have got out before. So a quick snipe in for a couple $100. But you get the idea. When I'm trading PD array to PD array, you really can't, when you get into these little consolidations, you can really snatch some quick little pips. Now, that wasn't a heck of a lot. That was probably, well, it was at least 10 handles. 10 handles is fine. Hit the breaker, roll over, come back down. We're between these two candles, getting small. Don't even bother. If it breaks through it, hell yeah, you'd be like, oh, why didn't you stay in it? Oh well. Here's the fair value gap here. We're in a consolidation, so coulda, shoulda, woulda. Back to the rejection block. Another place to pay out yourself if you're cashing on that long breaker rejection, because this may just roll over and come back into the small consolidation again now, and you didn't get the high you're looking for. Look for this new first, this guy right here. Body closes above. Find support. We still have this one here, premium discount. Runs through here. Find some support on it. Blow through there, come back, find support, and then continue on. So discount array into that candle. If this provides support, it's much stronger, and you start running for those highs. And I'm almost done for the day. My focus is fading. I am grateful. 16 of you. This is probably one of the most we've ever had hang in here till the end of my session. If you liked it and it's something you want to see us continually do, hit the thumbs up button. Lets me know that you guys appreciate or like what it is that we're doing here. And I appreciate that. And I might just come back and join you guys tomorrow. Well, I will come back and join you tomorrow, but right now It's lunchtime, 2 o'clock in New York time. We're expecting to see maybe a big rocket up here. Look at that support. We're coming up for the macro. The 2 p.m. macro has already started at 50, which was right in here. That macro begins right here. And we're up into the 10. Look for that. Look for here now. Look for a much more higher PD array in here, that range. There's a guy, an artist I know, just had some major back surgery. Is it pretty awesome? Same back surgery I had. Why don't we take that high again? Pyramiding. Well, it's been some really nice price action here for sure. Nice support. Running for this high. Excellent. Order block. Mean threshold. Reacting off of it. Doesn't mean to say it's going to hold. We might push right through this here, but it is a breaker. Last up close candle before run below this low. Runs down, breaks this. So it is a strong candle. But do we have stronger drawn liquidity higher? The breaker above. It's like a bishop and a rook. Which one is going to win? Well, this guy's going to lose. We got a higher drawn liquidity. Rejection block again. Done. Price leg is completed. Just ran those highs. Back into that breaker one more time. Just enough to run that high out. Looking good. There's some really nice little liquidity pool up here, Cody, if you're still in that trade. Nice little 130 swing below the low. Catch a run. Well, that's going to be it for me, folks. I'm glad you guys got some nice little coinage, and congratulations again, Kirk, for your amazing haul on your dollar bills. I love you, man. I think it's awesome, and I hope you guys got to learn something here about staying on the horse, holding on for grim death. If you start to get kicked off, find your footing, get a hold of the candle, find your range, get yourself back in sync with the market, and look for higher PD raise. We're going to rinse and repeat this every day, you guys. We're going to be going over every single candle as it forms and learning to stay on the horse. Stay on with the focus, watch the narrative, listen to the narrative, and if I'm wrong, you'll see me switch it up. And if I'm wrong, I don't care about being wrong, just get back on the horse again. And that's what I'm kind of here to show you guys. So I'm glad you're making some coinage on the side, if you are, and if you're making real money and you're trading real money and you're doing that on your own and you're doing it with a sense of certainty and with a trading plan that supports the levels you want to go to, 100% good for you. And I'm happy for you guys. I love you guys. Thank you very much for turning up. 16 people still turned up, still going. Thank you so much. I'm going to go have lunch, and that'll be it for me for the day. Look for those higher highs, the liquidity pool above you here. Look for a run up here. Don't forget this breaker or this order block right here. You can get a reaction off of that, so keep these areas in mind. If it just comes like that and drops back down again, I'm looking for this dude right here. I like that area of liquidity. If we blow through that order block on the hourly, the midpoint, the mean threshold, that 18,078 or 18,075, you start going above that, then I start thinking, look for the rejection block, and if you lose that, then 50% of the wick, and so on and so forth. You guys know the arrays after that, but I'm looking for the support at those levels right now. Just that guy there would be beautiful. Roll over and come back down. Anyway, that's where I'm looking. My wife's dinging me like crazy. Let me just get on this, and I will. Okay, I got you. I'm here. Again, another fill of a fair value gap in a premium range. Pay the trader. Pay the trader. Like here, pay the trader. If it comes back into a discount array, like right here, that'd be a nice place to get long off of that right there. I don't want to see this get lost here. I want to see it just come back, find some support at this, and go before it takes the highs. If it does. If it doesn't, then I'll come back after lunch and close out the trade. If that high gets taken, I'm out. Anyway, love you guys. All the best. I will see you tomorrow. Bright-eyed, bushy-tailed in the morning, my friends. S. Whale, thank you for your time today. Sammy, thanks. Adios. Kirk, love you too, man. Thank you, man, for your time. See you tomorrow. Will do.